Good afternoon, Your Excellencies. I think we have some former and serving ambassadors with us here. I think we also have members of the academia, distinguished ladies and gentlemen that have linked up from all corners of the world. Members of the press, media present, and members of the Nigerian Global Roundtable. All members of the CBN staff present. I would like to recognize the chairman of NIDO, I don't know if he's here, and all the chapter chairs and all other organizations present. This is a very important webinar as it concerns the monetary policy of the Nigerian bank, central bank. As you know, the Nigerian economy has been more or less faltering now for some time. I know the director may not like that statement. But this has made many to wonder whether there is a lack of synchronization between monetary policy and fiscal policies in Nigeria. So if so, why is this so? So we hope that in the presentation we are going to get answers to some of those things that have been bothering us who are not staff of the CBN. I am Dr. Jones Edward, an economist and the convener of the Nigerian Global Roundtable. And I'm your chief host for today. My co-host will be Dr. Camille Skonkwo. But before going on, and to introduce our guest speaker and the panelists and discussants, let me say a few words on who the Nigerian Global Roundtable are. The Nigerian Global Roundtable is an NGO, a think tank aimed at pursuing good governance and accountability to facilitate economic empowerment and overall development of Nigeria and Africa at large. So the think tank is a legal entity registered in Vienna, Austria, but draws its membership from distinguished Nigerian professionals from across the world. And now I have the honor to introduce our distinguished guest speaker and discussants. So let me start with our distinguished guest speaker, Dr. Mahmoud Hassan. Dr. Mahmoud Hassan is currently the Director, Monetary Policy Department of the Central Bank of Nigeria. He holds a BSc in Economics from the Ahmadu Bello University. He also holds Masters and PhD in Economics from the University of Surrey, United Kingdom. Before his current position, he was also Group Head Macroprudential Analysis in the Financial Policy and Regulation Department of the Central Bank of Nigeria. He was a special advisor to the Governor on economic policy and research of the Central Bank of Nigeria. He was a consultant, or rather technical expert of the steering committee for the establishment of African Monetary Fund with the African Union Commission in Addis Ababa. He is a term expert to the IMF and the AFRITAC Monetary Market Department, International Monetary Fund, Washington, DC. So, Dr. Hassan Mahmoud Hassan, you are welcome. Our second panelist is Chief Ambassador Dr. Camille Skonkwo. He is a Nigerian citizen living in Europe for almost 40 years. He holds an MBA in Economics from the University of Innsbruck and PhD in Business Administration from the University of Economics and Business Administration, Vienna, in Austria. He attended a post-PhD training in economic diplomacy at Diplomatic Academy in Austria, France, and Spain. He served the United Nations, New York, Kosovo, etc. in professional capacity. He is a lecturer at the Danube University in Krems in their MBA programs. He served the Embassy of the Kingdom of Thailand and other diplomatic organizations. He is the CEO of Hollywood Global Bridge Limited. He is the president of St. Camillus Life Care Foundation. Father of Peace from the Universal Peace Federation. So our next discussant is Professor Ogbojafo. Professor Ogbojafo Ben is also known as Ben Emukufia Akpoyomare Ogbojafo. He holds a PhD. He is of the Urovie ruling house and of Abraka Kingdom extraction. He is rewarded with a BSc, MSc, and PhD degrees by the University of Lagos. He is the first to obtain 3 degrees of the university in the Faculty of Business Administration. He served as the head of the Department of Business Administration for 1 year before his election as the Dean of the faculty for 4 years. 2 years, the first instance, and he got re-elected for another 2 years. He established the first business simulation laboratory in Africa as a dean. He is the first staff of the faculty to be elected by a congregation into the University of Lagos, a University of Lagos Governing Council in 2013 for 4 years. He prepared the business plan for the Joint University Preliminary Examination Board. Also, in his inaugural lecture titled Competitive Strategy for Survival in 2013, he canvassed for UNILAG Business School. UNILAG being the University of Lagos Business School. He prepared the business plan, which came into existence in 2018. He served the university in several boards, which include but not limited to University of Lagos Consult, Human Resources Development Board, Security Council, Guest House, Public Secretary, President, and Chairman, UNILAG Senior Staff Club at different times. He served in various editorial boards as member and editor. He once served as the public secretary, membership, and finally as the president of the Academy of Management Nigeria. He is the chief executive officer of Canham and Arcojets Limited. He served as a director of Hebron Microfinance Bank for 10 years. Currently, he is an independent director of Creditville and director of Magnificent Energy Limited. He is the Deputy Vice Chancellor, Management Services of the University of Lagos. Our next discussant is Dr. Olawale Mayegun. Dr. Olawale Mayegun is a public policy expert, an independent consultant, a former ambassador and career diplomat in the Nigerian Foreign Service. He is also a former director, Department of Social Affairs, African Union Commission in Addis Ababa. He is currently a senior advisor, Center for Sports and Human Rights in Geneva. He has published works in reputable journals on health, child rights, and migration. His current research focus is on the intersection of human rights and sports in Africa. He has particular interest in the migration and trafficking of young African athletes. It's about documenting the human rights risks and collection of accurate data for evidence-based investigation and remedy policies. So I welcome you all, sirs, to this event, and I hope this event will produce some valuable takeaways at the end of the webinar. We hope this will be the beginning of long-term mutual relationship between the CBN and the Nigerian Global Roundtable. May I now call on Dr. Mahmoud Hassan to start his presentation. And thank you very much. And once again, with my apologies for the long delay. Thank you.
Thank you very much. I hope you can hear me.
Yes, very well.
Okay, Dr. Thank you very much. And we're also with you during the struggling hours when you were trying to get this on board. I heard someone telling you that this is normal, so you shouldn't panic over it, which is really true. We've had some very key meetings that things like this happen and you see your fingers shaking. But that is the new way of living. Now, let me try to share my slide. I hope I can do it. Can you see it on the screen?
Yes, wonderful.
All right, good. Thank you for the introduction, and I also want to thank the group for finding it fit to call on central banks to come and share their own ideas on this. It's quite a good development that diasporans are engaging people academically and also to share knowledge and gain experiences from your own end in ways that economists are run there and how institutions are also addressing the challenges that are facing the world. I know a lot of time has gone. I don't know what time it is in Switzerland or is it Sweden now? But I'll try to take care to go through this very quickly, and then spend more time, allow more time for the panelists to also digest some of these things and share cross-country experiences. If I can move this around. Okay. This is the procedure I'm going to follow. I always don't like going through the outline, but I've more or less I'll make the introduction in the course of the analysis. I'll share with you the developments in both the domestic and global economy, which a lot of you are already familiar with. And then that will be a justification for why we're doing what we're doing now and the challenges that we're facing in implementation of the current monetary policy framework. And then I'll come up with the roles that the diasporans will play, particularly in our external sector, and the need for us to manage the supply side of our efforts, since we're going to be discussing some of the extreme challenges we have, which many of you outside of Nigeria are very familiar with. And then the challenge, the outlook for 2021 and beyond. Let me minimize this. I couldn't show my video, but at least you can see my slide. It's more important. I will still go through the state of the economy. Well, let me just give an idea of the current monetary policy framework that is being operated by the central bank. In terms of introduction, the Central Bank of Nigeria key core mandates is monetary and price stability. However, within that core mandate, monetary and price stability conducive for sustainable growth. It is very important we understand the meaning of that, and we're going to be digressing a little bit into those subsectors of that mandate. However, within the CBN Act, the amended one in 2007, the other mandates of the bank is also to ensure that the value of the naira is sustained through a good value for the naira. It also entails sound financial system, stable and sound financial system. It also entails the bank to be an advisor to the government, and then also issue leather tender currency. Section 33 of the Central Bank Act also empowers the bank to engage in developmental activities towards meeting this its mandate. So within that 4-5 mandates, we'll concentrate more on the price and monetary stability mandate of the bank. In the current framework of the monetary policy of the central bank, which has been in effect for over 10 years now, we have 3 buckets. I'm making my presentation with the belief that a few of us have some background of these things, so I will not be spending too much time on defining.
We have a monetary targeting monetary policy framework now. Like I said, I will not be going into the economics and definitions and the different types, but I just presume we'll have a few ideas. So if some of my analysis are a bit abstract, please kindly forgive me because we don't really also have the time to do that now. So within this framework, there's the inflation monetary policy frameworks. We have inflation targeting one explicit or inflation targeting monetary policy framework. We have those that are targeting monetary aggregates, and then we have those that are targeting money market instruments. However, for the central bank monetary policy framework now, which is a monetary aggregate targeting, the operating targets for the monetary policy is the monetary policy rate. The monetary policy rate is the rate at which the central bank gets money to the banks, or the central bank's interest rate between commercial banks when they are on lending to the rest of the economy, including households and firms. That MPR rate, monetary policy, is the markup rate. However, because of the stickiness of that monetary policy rate and the transmission mechanism that we find in the flow of monetary policy rates to the rest of the economy, we created a band. And that band is the upper band and the lower band. The lower band is the rate at which commercial banks keep deposit with us, and the upper band is the rate at which we lend to commercial banks. This rate is just between central bank and the banks. And currently, the upper band is plus 100, and the lower band is minus 700. So if the current MPR rate, monetary policy, is 11.5. So if we add 100 basis point, that is 12.5. That is the standing lending facility. And if you add, if you minus 700, that will be the lower band, which is about 4%. So any other rate under normal circumstances in the money market rate should not go below that lower band. Below that lower band, we call it negative real interest rate in the money market. Another target, so that is an operating target tool that we use to manage money supply in the economy, because we are using monetary aggregate. What we manage in order to influence output, growth, and employment is the quantity of money in the economy. Others look at inflation targeting, others look at other anchors. So because we know the role liquidity plays in the economy, given that substantial part of this liquidity is outside of the banking system. The other operating instrument we use is the open market operation. Open market operation, which we normally call OMO, is a platform where the Central Bank of Nigeria, how do you put it, mop up liquidity in the system. Because I told you our target is to control the volume of money in the system. If you're able to control the volume of money in the system, you'll be able to manage, stimulate growth from the domestic economy, and also manage prices, and including interest rates in the money market. So the OMO is a tool, it's an instrument, a security that is issued by the central bank to mop up liquidity in the system. So if we see excess liquidity in the system, we issue OMO. If we issue OMO, the banks invest in it. Investing means that taking off that OMO from us and then give us Naira, and then we give them the OMO certificate, and we keep this Naira. So these Nairas are moved up from within the system because central bank does not distribute Naira to people. Commercial bank are the ones that give credit. So, however, and this will bring rates, will allow interest rate in the money markets to go up because we have mopped up the liquidity in the market. So there's limited liquidity for the banks to just retain themselves. So those that have that liquidity jack up the price. We use that to stimulate money market rates. On the other hand, if we see that the system is dried out of liquidity, we sell back these OMOs to the commercial banks. Selling it back to them means that they will give central bank the certificate and take their Naira. So that Naira pumps into the economy, and when that gets into the banking system, the rates goes down because the rule of demand and supply also play a role here. Excess liquidity in the system, rate goes down because everybody has the liquidity. So the rates go down. So we also use that to moderate interest rate in the money market. And the discount window is the window where banks come to borrow from central bank, because it's not very common now, because it also has a stigmatization effect on the on the commercial bank. Ordinarily, banks are supposed to trade at interbank window. That is where banks exchange liquidity among themselves and charge at a rate. So if you have a good credit worthiness, all banks will like to give you funds, or you can take from other banks. But if you lose that credit worthiness, then your only option to come to central bank, which is the lender of last resort. So this window is called the discount window, and that's why I said it has some stigmatization. But in a period of crisis, all banks fall into that window. And then the FX window is also a platform we have used also to manage liquidity in the system. When we have too much liquidity in the system, those liquidity hits exchange rate demand pressures, and that will put a depreciating effect on the naira. So on that window, if you want to buy FX, we take off the naira from the system for a period of close to 3 to 4 days. If you want to do auction on Friday, on Thursday, from Monday, you deposit the naira with the central bank, and that pulls that money out of the system for 3-4 days, which also has some effect in managing liquidity. Then those are the operating instruments we use. And then what are we targeting at this? I've mentioned this earlier, is the reserve money, the quantity of money in the system, or sometimes we call them the base money, and the short-term money market rates, which is the open buyback rate, and then interbank rates, and what we call the overnight call rates, which is the rates that banks exchange money to balance up their accounts overnight. They call it call rates, and they also have the treasury bill rates, which are the risk-free government instrument. The treasury bill rate is also an anchor rate because it's supposed to be a markup rate just on top of the monetary policy rate I just mentioned. And the intermediate target between the operating and the ultimate target is the broad money, and which is the volume of credit to the economy. I mentioned all these interest rate management tools to be able to get credit affordable and accessible to the rest of the economy, including government, to be able to finance economic and business activities. So the ultimate goal is to get credit available to businesses so businesses can expand, the potential output gap can be narrow, and production levels can increase substantially, because we think this will drive the economy. So that's why you see sometimes central bank reduce rates so that credit to the economy could also expand, particularly like in the crisis period we have now. And then the ultimate goal, when I mentioned the key mandate of the central bank as monetary and price stability conducive for sustainable growth. That's why we are seeing inflation, which is the price stability, and output growth, which is the ultimate goal of the bank. This output growth will also now include issues like inflation. Which is like employment. So it's GDP growth that is employment generating, because you don't have GDP growth coming in from the oil sector, contributing largely to the economy, but it's a highly technology-driven, capital-driven sector where the labor intensity is extremely low. I spent a lot of time to talk about this because this is the core of everything I'm going to be discussing. Every other thing will just be around this framework. Now, I've mentioned the current template that we're using. I'll go into the development that have shaped why we're using this current monetary policy framework of targeting the monetary aggregate. Like I mentioned, other economists are targeting their operational anchors are those open market buyback, which is a process of where we take liquidity also from the system for a short while and then releases back to the system. There's a rate for that type of transaction. It could be secured, it could be unsecured, and that is the anchor rate for some monetary policy framework. They look at that rate and adjust that rate for interest rate margins in the rest of the economy to, as a signaling tool to movement in those interest rate margins in the economy. So the current tools that we also use are what sometimes called unconventional monetary policies or quantitative easing. We will come to that later. But this global breakdown I'm just trying to give now is to appreciate why we're where we are today, particularly in terms of the unconventional monetary policy through or the quantitative easing we are doing, or what they call monetary stimulus in the periods of crisis to revive an economy and drive business and economic activities to pick up employment levels and then improve on real GDP output growth. The global financial and economic crisis of the 2007 stimulated a lot of debate in terms of the efficiency of monetary policy tools in the periods of crisis. And that was what brought about the quantitative easing argument. That has been there since then till date. The European countries are still doing quantitative easing. The US is still doing it. Even in Europe, in countries that you guys are there, are also using, their central banks are using quantitative easing tools to inject liquidity into the system through asset buybacks, through government bond purchases from the private market in order to pump liquidity into the system. This is principally printing of money to meet this demand for liquidity. Then the second phase of it, or the second trigger of this development, is the COVID-19 pandemic, which just started last year, and the implication it had for economy. It was a health disaster, but we are now realizing that the economic distortions out of that health issue is more monumental than even the health disaster, even though we say that no money can buy life. But we see how livelihoods, and which is standard of living, conditions of living and health, has been also destroyed due to the close down of economic activities and through the lockdown and all the measures taken to curtail the spread of the disease. So that's the essence of this. Then the other problem was the big crash we had in oil prices. Early this year, we saw the price war between Saudi Arabia and Russia, and oil prices were going below $12, short below even $10 a barrel. The cost of producing a barrel in Nigeria is close to $14 to $17 a barrel. So if oil is trading at $12 a barrel, so you're even selling selling the oil below the production cost. And so we had NNPC said, the petroleum company said that we had 50 ships on the high sea that don't have where to back. We have no country that wanted to buy them. So that's when we had the oil glut that many of you are familiar with. So now an overview of the global development so that you can understand some of the issues I just mentioned. I hope my cursor is moving around from your end there so that you can see yes. So this is the output growth. This is the global output growth. And what we saw here is we saw our normal growth within 18, most countries were positive. And then by the beginning or end of 2019 and beginning of 2020, the COVID-19 struck and businesses were closing, airlines were closing, tourism was closing, factories, manufacturing, everything was going down, pressures on the health facilities. So economic activities were not taking place. So we had a deep decline in GDP growth, which led most economies to the negative territory. So we have Nigeria recorded minus 6.1 GDP growth in that second quarter because we started our own lockdown by March, April. Other economies that started in January had negative growth by the first quarter of 2020. And so by the second quarter of 2020, those economies were already in recession because they had two consecutive quarter of a negative growth. We had a positive growth. Nigeria had a positive growth in the first quarter of 2020, which was about 1.98%. But in the second quarter, dipped to 6.1%, and then further dipped in the third quarter, or moderated the dip in the third quarter to 3.64%. The rest of the world, South Africa dipped more than 30%. Europe dipped more than 22%. UK alone did about minus 24% decline. So those economies by the second and third quarter were already in recession. All economies in the world went into recession except for China and one other country. And so it was a global disaster. However, by the third quarter of 2020, and some countries that have had their fourth quarter of 2020, most economies are already getting out of this recession. So the projection is that the first quarter of 2021 will all record positive growth. The World Economic Outlook of the IMF just came out on 26, 2 days ago, and they're projecting that the global economy will grow at 5.2% from a negative of 8.2%. So that's a very big leap. Commodity prices, that's the oil price, and including agri and mineral commodities, are also increasing over this period. We see oil price now hovering above $55 a barrel, particularly the Bonny Light, which is the one that is the basket for most African countries, including Nigeria. The Brent crude is also, above $50 a barrel. The federal government budget in Nigeria was actually estimating, assuming that rate is going to be about $40 a barrel. So we have a big margin that will go to our excess crude account that will be shared among the states. International financial market also had their turbulences in that 2020, particularly the second and third quarter, but we've seen recovery in most of those markets, particularly due to the elections that was concluded in the US. And now that we're seeing a new government there, we're seeing some changes in international relations and market behavior. COVID-19, people in Europe know this more than us here. It's been very severe, particularly in the advanced economies, more so because of the number of tests they are doing, because of the number of data that we're seeing. In some African and many African economies, the tests are not done. So we see people jumping around, but we don't know whether they have COVID or not. Deaths are also not recorded. So we don't really know whether people died of it. But this graph we're seeing here is showing the proportion of spending that are going into the correction of this devastating effect of COVID on the economy. This is the global debt numbers. Public debt is increasing, like I told you. The central banks of most economies are doing stimulus packages, injecting liquidity into the system. The fiscal authority, which is the government, is also injecting huge funds into the system. The US, the advanced economies, the UK are spending over 15% of their budget, of the last year's budget, on stimulus packages, running into trillions of dollars. You're also aware that the US is also about to sign in their Congress another 1.9 trillion that is going to be a fiscal injection to the economy, giving money, direct funding to households. Nigeria is also doing huge here. We've done close to 5 trillion naira, which is over which is billions of dollars in terms of the foreign component of that. And the monetary policy rate has been expansionary, like I told you, because for many of the developing and emerging market economies, the inflation numbers were going up because of supply restrictions. So the expansionary monetary policy we used was to reduce the monetary policy rate I just defined earlier on, so that credit can go into the economy. You saw the intermediate target of monetary policy is to credit to the rest of the economy. So that is supposed to, as monetary policy rate goes down, the lending rate in the domestic economy is supposed to go down. But those that know this better knows that the transmission between monetary policy rate and the money market rate is also sticky in some of the less developed market economies. Global inflation for the advanced and developed economies has been very low, below their 2% natural margin. Some of them are actually having negative inflation numbers. But for the emerging market and many sub-Saharan African economies, the inflation numbers are going up substantially, which are more of a supply side implications. So for development that has shaped the current policy tools, now that what we are in now and the measures we have taken, I'm going to be mentioning them, I think, in the next slide when I look at the domestic economy. The recession, which I just mentioned to you, we had negative growth in the second quarter. We also had negative growth, even though smaller than the second quarter, in the third quarter of 2020. So technically, we entered a recession. However, we also had inflation numbers going up. For Nigeria, we had the inflation number for December was 15.75, was 16%, when we're coming from 14.78. So consistently, the inflation numbers are going up. So ordinarily, when the economy is in recession, inflation should be going down because people don't even have the funds to to buy the things that are in the market. So we're having double, whammy now, inflation going up and economic recession coupled with exchange rate issues for Nigeria. So this has led to high unemployment. This is not common to only Nigeria, in the whole world. We saw those numbers. America lost close to 40 million. Tight fiscal headspace because revenues are not coming in for government, particularly from oil-dependent economies like Nigeria, where you get huge 70-80% of your revenue from oil export. I told you about the price crash that happened in January, and also the demand for oil that closed during the crisis because of the global meltdown. Foreign exchange pressures, those that have their dollars here want to pull their dollars home to go and invest in their own market or even meet up their livelihoods and household income. And then the inflows are also tight. So why people that have their dollar are taxing for the dollars to go at foreign investors? The one that was coming is also thin because the people that foreign investors that will bring it in are also in crisis. So when there's a push for dollar to go out, we have demand pressure. And when there's high demand pressure, the price of dollar will now increase. That means the naira will depreciate. So you need more naira for the same volume of dollars as people are trying to pick up, the limited dollar within the system. And then I mentioned earlier the stickiness of MPR to money market rates in the domestic economy, the high interest rate for loan, and that's why you see central banks and government taking up assets from the capital and money markets so as to inject liquidity into the system to expand credit because the rates are really high due to the tight liquidity. Demand is also low. Aggregate demand will be low because consumers there's no employment, so people lost their jobs. So also is their household income. SMEs and small businesses are struggling, and then the challenges are just huge for the real sector of the economy. I gave you an overview of the. Can you guys tell me how many minutes I have so that I don't over talk here?
Well, basically, we have the webinar license, so we can just allow you to go on a while because of the late begin.
Okay.
So I indulge the other participants to be understanding, please.
Okay. Thank you very much. I'll also try to speed up a bit. I don't have the rest slides will be a lot faster. Now I mentioned the development of the global economy, even though I was mentioning Nigeria there. I'm now coming to the details of the domestic economy, which I've also mentioned in some of my analysis earlier. This is the GDP, and like I told you, you have the second and third quarter. We're still in the second and third quarter. This is the zero line here, where you come out of the recession. So here we are still negative, and then here too we are still negative. So we're getting up to the zero margin and to get out of the recession. So output contraction is still within the economy. There are projections that will pick up in 2021 by the first quarter. Unemployment and underemployment are those that are looking for job or those that are having the job that are not commensurate with their qualification skills and that. If you have a professor teaching in primary school, or you have an engineer that is doing organizer or stuff like that, or somebody that is a caterer and is selling boli, maybe you don't even know what's called boli, is a roasted yam, roasted plantain. Those are underemployed group, and then you have the real unemployed, those that lost their job from formal working places. That number has been rising. It's close to 28% now, 27.1, from levels a year ago of less than 18-19% for the economy. Broad money, I told you, targeted monetary aggregates is being in excess because of the pumping of money. This is also above our prudential benchmark. The broad money you see here, M3, includes money within the economy, currency in circulation, some deposit balances with the bank, including the OMO holdings. Ordinarily, we don't have these OMO holdings in our computation of broad money, the one we call M2. which is M1 plus quasi money. But we have a new computation which is called the M3, which include that OMO holdings. Maybe somewhere I'll also explain that that HOMO holding also have a foreign component. So we have this liquidity issue in the system, and when the liquidity passes a particular level in the economy, it translates to inflation, and that's why we have monetary induced inflation number. Don't forget that the central bank mandate is to tame inflation. So if you have this, then it's a challenge to the bank. And then we use those tools I mentioned earlier to, address this. But in a period of crisis, you don't use OMO instruments to mop up liquidity, because we need the liquidity to drive ourselves out of recession. They normally say, let's spend ourselves out of recession. So this development here on the monetary aggregate translate to these inflation numbers we have, including the structural issues that we have in the economy, which are supply side restrictions, infrastructural facility, decadence, and now the security challenges we have. Even if you have the produce don't get to the market. It also deteriorated to a level that you can't even go to the farms, or you can't go to the businesses because of the security challenges in the economy. So those structural issues are driving the inflation number up. The cost of foods and services is going up. And then we also have the challenges of climatic conditions, flood. Those of you that are aware of the Nigerian economy, during March, April this year, we had a few cases of flood where farmlands were damaged. And then the main driver of this inflation number we see in Nigeria, the highest component, about 50% of that component, is food prices. Then you have other ones we call core inflation, which is energy prices, the petroleum prices, the electricity tariffs, and other services. So the main driver of this inflation, over 50%, is food prices. And so if you have these climatic conditions, if you have these security challenges, if you have these supply side issues of not getting enough production, then prices start going up in the domestic economy quarter on quarter. Lending rate and the deposit rate, a lot of you will be familiar with this. The deposit rate is low, below 3%. The lending rate is above 20%. This shows an inefficiency in the market, because not naturally, for those of you in the advanced economy, you see that the difference between the deposit and lending rate is extremely low. The rate at which you get mortgages at those economies is far lower than, I don't think you can be getting mortgages at 30, 40%. You'll be doing 3, 4, 5%, and you structure them for even lower rates as your credit worthiness improves, or your mortgage gets to termination. And there's what we call the manufacturing and non-manufacturing performance managers index. Measuring is a computation of factors in a basket that is used to monitor the performance of the industrial or manufacturing sector. The threshold index is a 50 basis point or 50 index point. The economy currently is running below that 50 index point, which means industrial and manufacturing activity has not reached the minimal threshold that will be comfortable for the economy. There's still a widened output gap or production gap there. COVID-19 infection, I told you in the beginning, we didn't even start lockdown until around April, and even that was not very severe until around May, June. But now in Nigeria, we are seeing very high cases of fatality. We're also seeing very high occurrences of the COVID infection on people, particularly this new variant that is very deadly now. So we see big numbers. I'm sure the numbers are in thousands now, and even the casualties are also high. I told you that there was moderation and stability in the international financial market in the last third and fourth quarter of 2020. The same is also applying in the Nigerian stock exchange, the capital market, where we raise bonds for long-term investment. It's bullish. Bullish means that the prices in those asset prices are growing astronomically in those markets. Fundamentally, because one, I told you the rates are going down significantly in the money market, which is and the fixed income market. So the only option there is the capital market. So a lot of safe haven, the only safe haven now is to go to capital market where the yields are higher or returns are higher there. So that is making asset prices go up, or they call it a bullish market trend. When it's bearish, that means the asset prices are going down significantly. It's also an indication where fundamentals are okay and behaving under rational expectation. It's also an indication that economic activities have started picking up because these are stocks of either banks or businesses, breweries, Nestles, Cadbury's, and manufacturers. And so that is that about the domestic economy. I mentioned that the CBN currently undertakes a monetary targeting, and which is looking at the monetary aggregate, and that is the money supply side of it. You look at that money supply, the volume of money in the economy, you manage with OMO and the MPR, monetary policy rates, and then the OBB, the open buyback and treasury bill rates to also pick those monies out of the system. The treasury bills are where the federal government of Nigeria raises money in the money market. So they issue those treasury bills. The central bank and the debt management office does that on behalf of the federal government, and then take the cash to the federal government and hold these instruments on behalf of the federal government and discount them when the federal governments are supposed to pay back. That's the rollover period. Now, the key thing now is this conventional and traditional monetary policy tools, which are the ones I mentioned to you, and then the heterodox and the unconventional monetary policy, which are the quantitative easings. What this means is that the fundamental monetary theory does not envisage these direct interventions by the central banks, what we call helicopter money, given direct funds to the economy. The central bank does not lend to the rest of the economy, but lends to the government and the commercial banks. But what we see now, we see direct intervention to print new money to hit the economy where there are severe liquidity problems. So the conventional tools, which I already mentioned, are this monetary policy rate, we call the MPR, the open market operation, which is the OMO, the liquidity threshold ratio. This is the minimum amount that a bank will hold in the deposit of the central bank. So the liquidity is the money that is not available for the bank to spend. But we have also done a lot of things on this, where you have what we call the DCRR, where the banks, because of the liquidity crunch in the system, can come and assess this money if they have real projects, in agriculture, in manufacturing, or in the SME, small and medium enterprise sectors. The bank has a percentage of this fund that can give to them to go and do those activities. Otherwise, we keep the money with the central bank vault. Then the cash reserve ratio is the cash volume that the banks are supposed to also hold to meet their short-term obligations. I've already mentioned the standing lending facility window, which I told you about the upper and lower band of the MPR, and then the exchange rate management tools. We'll be talking about the exchange rate a bit further. The reasons why we also use the unconventional monetary policy. See this graph we are having here. The blue lines you are seeing there are the interbank rates. The straight line you are seeing here is the monetary policy rate that runs within the economy, the green line there. And then, so any rate that is below this rate is not reflecting the signals of the monetary policy authority. The central bank rate is inefficient. And then see the rate that is operating in the money market, the lower band you see here, that is the OBB rate, and then the interbank rate. They're all operating below the monetary policy. That means monetary policy tools cannot be used to address the monetary aggregate target of the central bank. So you have to use other non-conventional monetary policy tools to ginger the rest of the economy and also drive rates in the money market. So in the last MPCs that we have done, that MPC is the Monetary Policy Committee decision. The Central Bank of Nigeria has a Monetary Policy Committee. That Monetary Policy Committee includes the governor of the Central Bank, who is the chair of that committee, and then the 4 deputy governors we have. And then also have professors from the academia, from the financial system, from the manufacturing sector with diverse skills. The membership of that committee is supposed to be 12. Currently, we have 10 members of that committee, and they vote on which side, which monetary policy direction the central bank is supposed to go or the economy is supposed to go. So the decision of monetary policy is not based on only central bank, but also on these academia professionals and market operators. So they decide on these instruments that we use for monetary policy management. The monetary policy rate, which is the rate at which central bank, we call it the risk-free rate, and then the monetary policy corridor, I mentioned the 100 plus 100 minus 700, and then the cash reserve requirement, which is that deals with the balance sheet of the banks and including the liquidity. So this is within the banking industry, so that we regulate the liquidity in the system. Now, I told you, so because of what happened here, the behaviors I mentioned here and the scarcity and the ineffectiveness of monetary policy tool here, it leads to these stimulus packages by countries in the world. And I mentioned this also earlier. Governments, which is the fiscal authority, and the central bank, which is the monetary authority, have pumped huge liquidity into the system, not using their conventional monetary policy tools now, but using direct quantitative easing to inject liquidity into the system to drive the economy out of recession, particularly in this case, or to stimulate growth in their domestic economy, including international output growth. So we see countries like Japan here using about 67% of their previous year GDP as injections into the economy. I hope we'll have the table that contains the amount. They are in trillions of dollars. This is 22. Monetary authority is engaging 22%. So this 66%, the fiscal authorities is taking over about 46% of it, and monetary authorities is taking about 22% for Japan. And if you come down to countries like Nigeria, substantial part of it, we are doing just about 4%, of last year's budget, which is low, very low within this. It's only countries like Ghana and Kenya that are below Nigeria. But if you look at the population and the economic size of Nigeria, then you will know that the per capita expenditure in this period is extremely, extremely low. And that's where you're seeing just about 4.5%, when some other countries are doing 66%. The UK is doing almost 40% here. The US is also doing about 17% here. And then if you look at, so this is the stimulus package per head. And then if you come to countries like Nigeria here, it's way, way below $1,000 per head. So you see, and see other economies doing almost $25,000 per head. So this shows you how much countries have, fiscal models have injected liquidity into the system to drive growth. So the justification for doing this is a function of the economic fundamentals and the state of the global and domestic economy. So in this injection phase, what has the Central Bank of Nigeria done to also drive economic growth, reverse the recession, tame inflation, and then grow out employment in the economy? I mentioned those 3 or 4 challenges in the beginning of my presentation. So we did a lot of intervention packages, including those that are diaspora related. During this COVID-19, the central bank established different funds. There are existing ones, interventions in the agriculture, in the manufacturing, in the small and medium enterprise sector, in the health sector, in the households, subventions, and then we have this COVID group within central bank, chaired by the central bank, with the private sector, manufacturers, and the financial sector. Under the responses to drive out of the COVID-19, we have the establishment of 50 billion credit facility for SMEs through the NISA Microfinance Bank. Central Bank is the largest shareholder in this bank, but it's a private business or subsidiary under the central bank. But we also have stakeholders mobilization. The COVID I just mentioned has raised close over 40 billion, and out of which 23 billion was used to provide food materials to household. During the SARS event that happened recently, most of those warehouses were bundled, and it's also a distribution process anyway, because the food were not burnt going into people's houses, so long as they were not sold. I think it was a deliberate distribution channel. And this COVID is also through these isolation centers, and where they also provide us this oxygens and all the drugs for this thing. We have the central bank, what we call loan to deposit ratio. Banks are forced to lend out the money that is with them to it. So we have a threshold we give to you. You must lend that 56% of your available deposit to businesses. So banks don't just keep the money and be making interest or be investing in FX or buying treasury bills and are not interacting with the rest of the economy by stimulating growth. They're supposed to be the intermediary. They're supposed to do intermediation function, they call them, take money from the excess side and bring it to the deficit side. But you see banks sitting down and just doing FX transactions or just buying treasury bills, which are risk-free anyway, and then just make money out of that. So this LDR, loan to deposit ratio or loan to funding ratio, is to enable banks to, under regulatory guidelines, to extend liquidity, credit to the rest of the economy. We also to address the COVID thing. A lot of facilities went bad, and some others were challenged because businesses were closed, people lost their jobs, people were sick, people died. So banks were given what we call forbearance. We looked the other way against the rules and said, okay, you're supposed to do this, but because of this crisis, we're adjusting this. So there were restructuring of loans, and particularly the loans that are held to central bank, including our intervention facilities. Most of the interventions that were doing 9% and 7% were brought down to 5%. The bank has also extended that for another 12 years. So businesses can also have a breathing space to replan their economies. The manufacturing sector had a state fund of 1 trillion naira for interventions, particularly to the small and medium enterprise businesses. And that has really helped to ginger growth in the economy. Other quantitative easing facilities, this targeted credit facility is to specific sectors, youths, businesses that are related to households and individuals and small businesses, only 3, 4, 5 million, 2 million. This amount has been increased to 300 billion now to be accessed by the general public. There are issues with accessibility of this fund, and the bank is also automating this process now, so that like in advanced economies, you can sit on your desk, put in your details. We have all this credit check system that are connected to that platform, and then you can have a credit check, your addresses are confirmed, KIP things are also confirmed, and then you get your funds within 24 hours and do those businesses, and then inspections are going to follow. But you also know the structural issues we have here. The system is not that efficient. People don't have correct house addresses. People don't have NI or social insurances that you can trace their workplaces or jobs or history. But however, because of the need to get these funds to the rest of the economy, because there are complaints that, well, we are hearing all these trillions. We are not seeing it in the pocket of people who will say they applied 2 months, 3 months, they've not gotten the money. So that is going to be out of the way now, given these interventions that are going on. Then in the real sector, we have interventions in the agricultural, manufacturing, health, electricity. The bank is also financing the supply of 5 million, 50 million, yes, meters for households and farms, because we saw a lot of you are aware of the challenges we have in the electricity sector and the low electricity supply and the wastages even in that sector, which is not unconnected to the infrastructural deficiencies that I also mentioned. However, the bank is coming on when that sector was unbundled, and you have different sector of the value chain in the hands of the private sector. You have the GenCo, the generating companies, you have the transmission, you have the DISCOs, the distribution companies. So the supply side of the distribution company is what is still, many people just get what you call estimated billing and they don't have value for their money. So now the bank is supporting that process by buying meters for the houses. The minister once said that if you don't have a meter, don't pay a bill. So if you want to collect bills from the people, then provide meter, because these guys are supposed to even make some level of investment into that businesses. But we saw that, well, some of those things were politically motivated. So people that come in don't even have the technical capability or technical partners to even drive those processes. And then you have the specific, in the employment numbers I mentioned to you, 60 to 70% of those that are unemployed are in the youth category from 18 to 35 years. So there are special interventions, 75 billion to address the youth, including creative industries, those into music, fashion, and salons, and creative industries, those doing these dramas or movies and stuff like that. And then the exchange rate, expanding the exchange rate window. We also created the FX window, particularly for SMEs, to access just $20,000 in the exchange rate market, because for them to open letters of credit and do Form M, all those, just to maybe bring some chemicals that will pesticides, or to get some inputs for their manufacturing, small manufacturing business. We created that window, they call the SME window, for them to access just like $20,000 to do those importation. But the main window for the FX transaction is what we call the investors and exporters window, where we have transactions there now running in billions of dollars. We are doing over $20 billion now in that market. I'm almost done. And so, outcome of monetary policy measures. The loan to deposit ratio I just mentioned to you now has expanded credit significantly in the economy. The threshold is 65% of the total banking industry deposit. So each bank is supposed to do that. If you don't do that 55%, we charge the difference out of your balance sheet with the central bank and take that money off your books. So keep it in central at no interest rate to those banks. The bank also lower the monetary policy rate to also translate to lower interest rates. So we have a justification to ask bank to bring lending rates down, because the rate at which we get money from the central bank is also lower. But like I mentioned, we already have a negative real interest rate in the money market, and that's why you had the attractions to the capital market. But that is also good. The capital market is a source where you raise a long-term fund, which is even better than the money market window. But banks are not necessarily supposed to lend at for long term, because they always have this current account deposit, the largest part of their balance sheet. We're seeing a pickup in the performance managers index, the one I mentioned earlier, that is below the 50 index point. It was far below 40, and it's now picking up to 49.6%, which means that industrial activities are taking place now, because these injections are already impacting on the rest of the economy. And the stock exchange is also picking up in asset prices. Now, the real challenge, apart from inflation and the recession we had, was the demand pressure for FX and the continual depreciation of the exchange rate. Ordinarily, in economics terms, the depreciation of the naira is good when you want to export, because it makes for those that are producing these exportable goods to earn more money, because they get more naira for the export of those goods. And those that are importing, it will be very expensive for them to import. So it allows the domestic economy, the manufacturing and the producing sector, to grow very fast. And most advanced economies have adopted it. But in our case, because we don't produce, and because we are import dependent, and because also the economy sits on rent seeking, and rather than productivity and output growth, you find that a lot of people have this money and prefer to import. So people will import the sand that they put in their flower bed, they import water that they drink, they import matches, So you see this heavy demand for foreign exchange. And the only source of foreign exchange is government revenue from oil export. So if you don't do export of goods, non-oil exports and other channels, then if government revenue dries out, then everybody is in crisis and the economy is in collapse. So now the bank is working at looking at other supply sides of FX apart from oil. And one big part of it is from the non-oil export, with those that produce cash crops and minerals and other things that are exportable, is also the diaspora funding. Estimates has it that the total diaspora funding that comes to Nigeria yearly is about $20 to $22 billion. Those funding don't come into the banking system per se, apart from what we have through the IMT, International Money Transfer Operators. And that the volume you have there is still less than 2-3 billion in a year. So what the bank is trying to do now is to create investable instruments where diasporans can invest in those instruments with very good returns and the assurance that their funds are safe. So if you are living abroad and okay, yes, I want to come back to you, but I want to build a house, you don't want relations or friends to swindle you, you invest in that instrument. And when you are ready to come home, you discount the instrument at home and you get your dollars and change it to naira and do your investment. However, while you are doing those investments, those dollars are available for the economy to use. And that will reduce the supply shortage that we have. And so long as there's liquidity in the market, just like I mentioned about excess liquidity in the money market, the rates will also come down. The exchange rate will come down because there's enough dollar in the market. So you don't need that much naira to get the same volume of dollars. So we're trying to create those instruments to attract that. There's as another channel too is during this COVID-19 crisis, the remittances that came to most African countries was a lot larger. And why was that? So, and people are wondering, but there's crisis, people are losing their job. Why are we seeing more remittances? The thing is that all the channels for remittances closed. So you have to just use the formal channels. So the formal channels are recorded. So you can now start seeing the numbers coming in. Your relations that you give $500, please give to my sister at home, give my brother this, give them cash. They are not able to travel. The airlines and stuff that are also operating are not operating. So you just have to use the formal channels, even if it's to use the Bureau de Change or the FX private FX company. So those go through a formal financial terrain and they are recorded, and that's why we start seeing the number. It's not that the money has increased; it's the same money, but there were other channels that were coming in. But we want to tap into that, make it a lot cheap for you to send your money. Currently, it costs you about $12 to send, I think, $1,000 to Nigeria. I saw those numbers yesterday. I'm not very sure about it. We want to bring that to a very minimal level, very comparable to other countries, so that you can, have the incentive to send these monies, even to do businesses in Nigeria. The other option is also to make the diaspora fund reach when people send their money to Nigeria in dollars, $1,000, the person gets to Nigeria, you know that the rate that is going on in the market is maybe 395, but the remittance companies will not give the person 350 because they don't give the dollars. Now the bank has made instruction that if somebody sends $200, give the receiver $200. The receiver chooses the market where he exchanges his funds, and then that gives them the value for their money, because it was also a rip-off from the IMTO. So those are some of the policy tools that we are bringing on board to address that diaspora info. Now going forward, this is the last two slides that I'm going to be talking about. Going forward, what is the way forward, or what are the projections for the rest of the economy? I've been mentioning recession, inflation, unemployment, depreciation, exchange. They're all bad news. What are the prospects for the future? Well, for the global economy, the World Economic Outlook released by the IMF, like I said, on the 26th, is showing that the economy will grow at 5.2%. Nigeria will grow by 1.5%. Our own domestic estimate, including the Nigerian Bureau of Statistics, is the National Bureau of Statistics, is 3.2%. The central bank is also doing above 1%. So whatever way, and this is even in the first quarter of 2021. So we see, light at the end of the tunnel, and these are good news based on the fact that we have vaccines coming up now. We expect that will mute the impact of COVID-19 on the rest of the economy, and economic activities will pick up, lockdowns will close, central bank interventions that are coming in, both fiscal and monetary authority, that will also help. We had issues with the borders recently, but those are open. We have what we call the African Free Trade, Continental Free Trade Agreement, and that started January 1st, 2021, and that is to enable, competitive trading within, improve intra-African trade within Africa, so that we have a very big market. Africa is more than 350 million people, of which 200 million is only Nigeria. So those are platforms where we can use to, increase intra-African trade, just like the European countries and the Eurozone are doing, and that will drive our ability to also trade amongst ourselves and create jobs for our businesses and manufacturers. And then, the forecast for the GDP, like I just mentioned, this is for the economy, 3% from a dip of 3.50. The red lines these are all negative numbers, and the green lines are the positive numbers. These are the forecasts for 2020 and 2021. The both from the World Bank, the IMF, the Central Bank, and the Ministry of Finance, or the Budget and Planning. So I've given you a general overview of the challenges, the current monetary policy framework we use. I didn't spend much time going to the history of monetary policy or the theories or the cross-country analysis, but along the line, I spoke about what is happening in other jurisdictions. And then I bring you to the issues of why we're doing what we're doing now, including the non-conventional monetary policy that has been adopted, because it's in the literature everywhere and analysts are already talking about it. And so that is a breakdown of where we are now and where we're going forward. Thank you very much for listening.
Thank you very much, Dr. Hassan, for this comprehensive presentation. It's very informative. It contains a lot of information and so many figures and so many points that we may not be able to digest all of them in this few hours that we have. But we shall try. We shall try to see what we can pick out of them. I like the point you spoke about the deposit and lending rate. You spoke about the money and price stability. And then we also had you talk about the bands, which is the open bands, and why the difference is so high. Maybe we are going to revisit that. You spoke about the OMO, the discount, etc. So, but before going into details, I don't want to, let me call on our panelists to make their immediate statements before I get us back to the points that I have to raise. So let me start with Dr. Konkwo. Chief Dr. Konkwo, is there any immediate remark you would like to make to the wonderful presentation of Dr. Hassan?
Well, let me start by saying that Dr. Hassan has actually shifted my impression paradigms of CBN. This is an incredible presentation. This presentation surpasses every other expectations I had. I really want to extend my warm gratitude to you for bringing the points you've brought here. An area that is of particular interest, I mean, Dr. Hassan is speaking to the diaspora. An area that is particularly interesting to the diaspora is the issue of remittances. And Dr. Hassan has said some good things about facilities and instruments they have for the diaspora who want to save in dollars at home. There is need to expatiate a little bit on that. What is that instrument? How does it work? Is there a messaging system to enlighten the diaspora a little bit more so that they can get to know these instruments and how and when to use them? Then there is another issue he mentioned about, doing something to crash the service charges of remittances. I think I heard something about $12 for a given amount. So we need to explore that further, expatiate a little bit on that. What are the facilities? What are the instruments that the CBN intends to deploy to achieve that service, that is remittance fee target of about $12, if I got him correctly? There are other macroeconomic policy issues Dr. Hassan has addressed. I don't want to monopolize the discussion at this time, so we'll get to that as we go on. Thank you, and back to you, Brother Jones.
Thank you very much. Dr. Hassan, do you want the other panelists to first of all make their comments so you can answer all in one go? Or
Yes.
Or do you want to answer each time somebody says something?
Yes, I think I will allow the panelists to ask all their questions and comments, and then I'll take all at a time.
Perfect, perfect. Okay. I would like to go to Professor Gojafor. Professor, you probably have some comments to make, at least in the first round. So what are your comments, or would you like to add to what has just been said? Is Professor Gojafor here?
I can't see him on the screen.
Okay, let's move on to Dr. Mayegu. Dr. Mayegu, is there anything you would like to add at this point, your comment?
Well, thank you very much, Dr. Edobo. Let me really express my profound appreciation to Dr. Mahmoud Hassan for not just for his eloquent but precise presentation. And I'm also so convinced that he has removed certain doubts that I have about the central bank. But at the same time, he has also consolidated some of my views and perception. And I'm going to put them in some question form so that they can be easily addressed. He has demonstrated, his presentation has demonstrated that most of the policies are still geared towards kind of price stability. And for me, as a policy expert and as a social policy expert, because even as a diplomat, and in the last 15 years of my career before I left that off, it has always been to look at the social aspect. And I see the central bank using monetary policies towards the attainment of what I call right-based policies. In this particular case, he touched on some of them, but I will need him to expatiate more. How is the central bank using monetary policies to address issues within what I'll call our sustainable development goals? And I'll pick one of them. One of them is financial inclusion. In a 2008 survey by a development finance organization, about 53% of adults were excluded from financial services. The figures that you even also find on the CBN website says that in 2010, it was reduced to about 46.3%. I'd like Dr. Hassan to help me out. What is the rate of financial inclusion and inclusiveness in Nigeria today? Because if we are all going to benefit from using monetary policies for economic growth,
Let's get on
what is the latest figures in terms of financial inclusiveness? And I'll continue on that. It's still not clear to me how the central bank is helping to tackle the issue of unemployment. I have seen the amounts he said is being set aside, 50 billion for credit facilities. How is the central bank really making the commercial banks, or in terms of its own policies, really setting the pace to help unemployment? How is it being targeted? I will need more something from him. The figures notwithstanding of 300, going up to 300 billion, 50 billion here, or 75 billion to youth something. I will probably want him to be more specific, because most of the people we are referring to are in the small and small scale, small and medium scale. Finally, let me go back to what Dr. Okonkwo had said earlier in terms of the remittances. And I'm glad that you touched on that. When I was Director of the Department of Social Affairs at the African Union, it's to my credit that I helped to establish the African Institute for Remittances based in Nairobi at the Monetary Institute, at the Kenya Monetary Institute. And it's been collecting data and generating data. We have the SDG on the amount of reduction of remittances. When the project started in 2010, cost of remittance flow in Africa is as high about 20%. Today, thanks to the involvement of mobile telecommunications and the MTOs that you've referred to, the cost is coming down. The target is about 2 or 3% in terms of the SDG. I would like to know from Dr. Hassan, Dr. Mahmoud, how well on track. You just, you give $12 per 1,000 transfer. Well, that may not look so bad if I heard you well, but I want it to be expressed in more concrete terms, whether we are on track to meet the SDG set by the United Nations as part of the cost of remittances. Secondly, as a social person, again, you have mentioned that you're trying to get some instruments. Again, you haven't mentioned those instruments. We have always been on trying to leverage remittances towards social development in particular, because we know what people spend the money for, mainly education, food. It's a private social security for them. How well can the central bank, again, use monetary policies to really make sure that, as the COVID has shown us, you can use the remittances to boost the national health insurance scheme that most Nigerians do not have, that still likely remains with government workers. How do we improve the national health insurance scheme? And I think this is in the hands of the central bank as part of those instruments. It's not just enough to say, well, if you want to construct buildings, this, that, fine. But there are social protection that Nigerians deserve, that so much of the money coming from the diaspora in terms of remittances can help if adequate leveraging is put into place. This could be for education, it could be for health, that I said. So I would like to hear more from Dr. Hassan. But one thing that troubles me is that Nigeria is among those who have improved on measurements. Because all about the remittance flow we're talking about, and for you to be able to, to have accurate picture, is about measurement. Nigeria, Egypt are the pace setters. That is why you can account for 20 to 22 billions, but you've rightly mentioned that billions are through informal channels. The challenge is, how do you get those things to come to the formal channels? If the central bank's intention is to try to use remittance flow for foreign exchange stabilization, you're going to get into a problem here. Unless I get the point you're making wrong. And why did I say so, Dr. Mahmoud? We can see back and forth, way back in 2015, the central bank was dealing with the registration of the MTOs. And I believe it's also in terms of trying to shove up the value of the Naira. Now it has turned out not to be so, and we've seen you going back to 2015 in terms of paying by dollars. I remember before, people were collecting it in dollars. So unless you come up with better measurements and incentive enough to make people use the formal channel by making sure that it is safe, it is cheaper, and then you win, and then they can leverage it for some other social protection policies that I mentioned. We will still not be getting what I call a more accurate measurement. When you have accurate measurements, it will definitely have a knock-on effect on the exchange rate. But it's not going to be. It will be taking a wrong step, in my view, if the central bank thinks that it can use remittance flow. And the reason is, I'm going to say this is this. over time, you will observe that remittance flow from Europe, yeah, it's still the highest so far, and North America. But increasingly, it's the remittance flow within Africa that is more consistent and has been rising. And most of this remittance flow from Africa, if care is not taken, and unless you make it safer, will not come through the banking channel. These days, those in Europe and North America is when they have big projects that they do send money home. Those in Africa, from the studies of the Africa Institute for Remittances and from the data collected, is small amount, but very consistent and very reliable for the social needs of people back at home. So the central bank may also want to focus more, and Nigerians are very much present in Africa, whether within the entertainment industry you've identified, or whether in terms of our banks and how they are operating there. So you have a lot of flow within Africa, and I believe we need to improve the measurements in Africa, where most of the remittance flow actually come in unmeasured. I'm going to stop there for now, but the gist of my problem and the questions I've raised is that I want to see the Central Bank of Nigeria use more of its powers and the instrument to look more into social development. Finally, Dr. Hassan, I'm going to ask a provocative question. The 2007 Act of the Central Bank has given the Central Bank more autonomy. But I don't think I have seen the Central Bank making use of its autonomy as it should in terms of setting those policies we've identified. My perception is that the Central Bank of Nigeria continues to behave like an appendage of the Ministry of Finance, which is not. The Central Bank I see in the terms of Soludo is far, far different from the one I'm looking at now. I said I'm going to be provocative about that, but please take whatever I say in terms of, in good light and in good faith. Thank you.
Thank you very much, Ambassador Mayegu. I think you have raised several points. You have spoken, amongst others, about the independence and autonomy of the central bank. I think we shall probably, Dr. Hassan definitely will be addressing that. I think that is a very, very important issue as it, excuse me, as it relates to the central bank being able to actually implement monetary policies as they should. But before then, I just wanted to add to what both of you have already said. Before we call in the participants to ask questions, some people already writing to say they have questions to ask. But let me just add, at the beginning of your presentation, Dr. Hassan, you spoke about the primary functions of the central bank, which is money and price stability, which is the primary function of all central banks in the world. I wonder, is the central bank not able to meet that function because the value of the naira basically has almost no storage value at the moment. The value is falling and the interest rate is rising. I have the statistics here. Maybe you have another one, but this is one I have. So it is not only about the lockdown that the Nigerian inflation rate has been so high. In 2017, from the statistics I have, inflation in Nigeria was 16.5%, one of the highest in the world. In 2018, it went down to 12.9. 2019, it was 11.4. But in 2020, it went to 12.88. And now it is being estimated to go to 14.80. Now, in this period, the USA has 1.26 in 1917. 1916, 1917, it was 2.14. In Nigeria in 2018, it was 2.44, and Nigeria had 12%. In 2019, the US had 1.81%, which is comparable to what we also have in Europe. And Nigeria had 12.88%. Now, you spoke about loan and deposit ratio, and you spoke about asking the banks apparently for liquidity management reasons to give credit to the commercial to depositors. They were, I think you spoke about 60-something%, if I have you correctly in my memory. And I wonder what has happened. Are the banks fulfilling that guideline at the moment or not? And if yes, why are the SMEs still not able to access credits in our banks? Why is it that production is not rising? And the reason why production is not rising is because of the level of interest rates which we have in Nigeria. And I think that is a very important issue that we need to discuss. Why do we have an interest rate that is, you mentioned, I think it's around, you spoke about the MPR or the band, which is around 12.5%. And why is the MPR so high? At a time of crisis, why is the Nigerian interest rate so high? How can these interest rates lead to productivity, to production in the industry, and lead to employment opportunities? So that is just, I want to stop there for the time being because there are many things that I have written down. You spoke also of helicopter money. I mean, you know very well that when you pour helicopter money into an economy, it leads to inflation because it has no base in production and it has no base, so automatically it leads to inflation. And we already have very high inflation. So I wonder, maybe you can also expatiate on that. But let me stop there now before I take too much of the time. So the participants, please be a bit patient. Let him answer the few questions that have been asked, and then we will take questions from you, please. Thank you, Dr. Hassan, please.
Thank you very much. I just spoke to myself that I will not be intimidated. I will sum up courage and try to answer all the questions because they are very germane questions, and it is important that we have this conversation at this very high level. And they're also very high level questions. I really appreciate the commendations, and we hope to be engaging further in this. It's very good that you guys also created this platform to be engaging with Nigeria back home and also getting to tap into what is going on, particularly at the policy level. Dr. Okonkwo wanted me to, expatiate more on the diaspora remittances and the cost of remittances that I talked about. I think also the Ambassador Mayogun, Dr. Mayogun, also touched a lot on that. The bank actually developed a policy paper on how to attract new capital into the economy. And one major source of that capital attraction is diaspora funding. And I'm very happy the ambassador also mentioned it. Substantial part of the technical inputs that we get for that was from the African Institute of Remittances. In short, the Trade and Exchange Department of the Central Bank is actually liaising very strongly with that institute in terms of the technical expertise that is required for a lot of engagements going on there. I'll be answering Dr. Okonkwo and the ambassador's questions because on the remittances together. One, the instruments we're going to create, it's quite diaspora specific, and there will be a definition of that as we discuss further. But we're going to be bringing out a guideline on how that is going to be implemented. because what, like I mentioned, that there's a huge resources in that sector, and like Dr. Ambassador mentioned, yes, we are also targeting the social benefit of it, because it's not just bringing money for portfolio investors or for, no. We're seeing how that can, because people that are also living abroad also want to impact on the livelihoods of their relations back home, or even their community. It doesn't have to be their relations, even their community. So we want that to really impact on lives and livelihoods, not necessarily to do infrastructure or to build hospitals or to, but also on these miniature activities that will improve life of people going to schools at early ages, so you don't have school dropouts through relations. And we know of diasporans that sponsor people in their villages just to go to schools, not that they want to build houses or stuff like that. So the social benefit of it is extremely important. The sustainability of it is extremely important. And I also touch on the financial inclusion side. So for the details of the diaspora fund, we're going to be sharing that with you. It's still something in the making, and like I said, it's in the concluding part of it. But most of these things will require some approvals before we make it public. We're going to be doing that as soon as possible. But there are thorough engagement going on, particularly with the Diaspora Commission, which a lot of you are also members and sharing that with. We don't have other platform that we can engage diasporans apart from those type of platform because of the official nature of it. But the details will be in the guideline. And if any of you that I already have contact with here, I can also share that with you so that you can also splash it to the rest of the people. So that's the much I can say about that. In terms of the cost of remittances, we've seen that this as a major discouraging factor in terms of why people use the other channels. It's not that they don't have the legitimate money, but when you start going through all these protocols, bring your mother's birth certificate, go and bring your full house address, go and, so we want to bring that, even the administrative cost of it, down significantly. The analysis I did was a comparison of countries and how much does it cost to remit currencies around the various economies of the world. And apart from Egypt and maybe Kenya that are lower than Nigeria, we see other economies doing as low as $4 to remit $1,000. So we need to come down to that low levels to attract that, and also bring a lot of transparency and ease coming into it. You can even remit to someone's account direct. You don't have to go and start collecting cash. And when he goes to the bank, he can withdraw his money. So the details of all that will come up. Now to the ambassador's questions, which are extremely very, very rich and also thought-provoking to even me that did the presentation. One, on the how monetary policy can address these sustainability development goals. One is part of the targets of the central bank, implicit target of the central bank to meet those development goals in terms of either financial inclusion or poverty reduction, such that the argument has always been that economic growth that is not inclusive. That means maybe one sector or two, like we have the oil sector driving the rest of the economy, or 85% of the nation's income is in the hands of 10% of the populace. 5% of the populace. So we want that inequality to be dispersed significantly so that what we call the Gini index of Nigeria will be extremely, extremely low, because the inefficiency is also telling in some of these inflation numbers and exchange rate issues we're finding. So inclusive growth, and that's why I said the mandate of central bank is price and monetary stability conducive for sustainable growth, the growth that is not fragile, the growth that is lasting and is inclusive, participatory growth. And that is why CBN emphasis now is on what you call MSME, micro, small, and medium enterprises and small scale business. These are the largest employers of labor. These are people that directly, engage in business activity that's impact on them immediately, not like these large conglomerates that are highly capital intensive and use more of technologies and sciences to, generate their income. So sustainability issue is very key. The target for the central bank is to bring down the financial exclusion to, I think, 10% by 2030. The threshold for 2020 was to bring it down to 20%. I think the numbers are not out yet, but I think that is going to be released very soon by Elfina to see that the number of financially excluded people will reduce to less than 20% by 2020. So we'll see that, but I want to assure the ambassador that it's a primary target of the central bank to meet this, because we see economic growth, which while economic growth is increasing, poverty is also increasing. So that growth is not inclusive. Now we are seeing economic growth picking up from the recession, but the unemployment numbers is also rising. So the economy is growing, not with the people being involved in the driving of the economy. So it's very, very fundamental. And on the issue of remittances, like I've mentioned, the African Institute for Remittances is a very serious partner in this. And the Trade and Exchange Department and Financial Market Department is also engaging at official level with this institute. And I know that high-level meetings are already taking on. So is central bank on track on the SDR threshold? Certainly, it is a target threshold, and when we're below that, the crisis triggers will be shifted. Whether those investments are going to the national health insurance, and how will that improve? All that are on the pipeline, and I'll be engaging more with the ambassador on some of these issues, and also link him up with some of our staff. I hope we will be able to share your expertise with a lot of us here, and maybe we'll also create this kind of forum for you to also, give us some insight into this and maybe engage you formally on this, because you have a wealth of experience in this. So how do you get the informal sector into this channel? One is we've also limit the identification criteria, the KPIs now, or the KIP, know your customer, KYC. We've reduced to KYC in some of these financial services, and this is also related to the financial inclusion things. Now we have the tier 1 and the tier 2. Some of these exchange transactions are coming to tier 2, where you don't have to go that far. So long as the system can take your picture, that is enough ID for you. You don't have to go and bring your passport, or you have to go and bring your social insurance number or driver's license, all those difficulties that we used to have. So that will also enable a lot of, because when you go to banks now to also claim some of this your funds, okay, bring your passport. If you don't have a passport, bring a photo ID. Somebody that comes from a village and so is on his own business, you ask him to go and bring a government approved ID. He doesn't have. So we're also doing those KYC, making ease of doing business. Those are part of the things that we're really going to do to enable the informal sector also appreciate this. It's for the tax rules. We are also, enable that so that people don't just use those avenues because they want to evade tax, or some of the charges that will be made will be wiped out. And that's also including the IMTO cost of reduction. Okay, yes, the one very important issue the ambassador raised was in terms of whether these diaspora funds that we are looking at is for central bank to use to manage the FX. No, absolutely no. The problem we have at the central bank window is that we want to reduce the demand that comes to that window, because ordinarily the central bank window is supposed to be for official transaction, government, because we are bankers to the government. We want the demand and supply driven market, the IE market, to be the driver of exchange rate. Even the BDC that we created is a child of necessity. I'm aware that there's nowhere in the world that it exists. There's nowhere in the world that you see a central bank giving money to something to go and sell on to the rest of the economy. It's only in Nigeria that it exists all over the world. But that came out from the FX market failure, because we have these small buckets of people that need just little dollars, 1,500, and you have to go to bank, you have to fill Form A, Form M, and do all sorts of things, and bring invoices from abroad and stuff like that. But because you want to travel, you want to say a confirmed ticket, you want to say a confirmed visa, you have to say a confirmed hotel book, So we created that BDC window to make, they are not supposed to be doing transaction more than $5,000. But the way things are now, you see them doing transactions in millions, even doing remittances. which is illegal anyway. And then you see the price variation and other corrupt activities that are also people that don't really want to raise the money for legitimate businesses go to those windows, which is so you can't differentiate between a BDC and a parallel market now, because they're like the ambassador also mentioned, you see the rates flying in those markets, and then you say, but central bank, we are talking of 397. Why are we seeing 480 here? So those are the kind of things we want to address in that sense. So the diaspora funds will come to those that will use it, and they will use it directly. Don't forget that you can open a domiciliary account in Nigeria without having any foreign businesses. So you can get your fund, take it to your account, and if you want to import or process something, you use money from your account. You don't need to come to central bank, so that the demand pressure will be less on central bank. And that money, that diaspora money that's coming in, will increase liquidity in the system. What is bringing depreciation is the liquidity. The funds are not there. So the little that is there, everybody wants to take on it. So the offer will be going higher and higher, and the highest bidder will take it. And those that are supposed to do other genuine things will not have access to it, including SMEs. And then the financial inclusion issue is challenged. The sustainability is also challenged. So the social protection issue is very key. We've been saying that, well, this central bank is to impact on life and livelihoods. Central bank is not just using economic terminologies and just talking of inflation and exchange rate, and people are still not having jobs, people are hungry, poverty numbers are going up. It's of no effect. So we want the central bank policies or the monetary policy to impact on life and livelihoods. And so we've reduced the emphasis on large conglomerates to SMEs, small businesses that will take 2-3 million, and then they will impact on millions of lives, because those are the largest employer of labor. So everything that is being said, particularly by Ambassador and Dr. Okonkwo, are centered around this, sustainability issues, which is just paramount, and it's a global phenomenon, and we're also in that chain. So the exchange rate is just to be in the market for end users. We are not saying that if you bring those exchange rates, bring it to the central bank. Even the ones that you are going to be remitting to your people gets to them, and they use it the way they want. But those demands will not come to central bank again. We've also done that airlines, to also ease this demand pressure, that airlines should issue tickets issued in Nigeria in naira. Let them come to central bank with the naira. We'll give them the dollars. So you don't have condition where you tell people, because you want to buy a ticket, you must bring dollars, or you must use a dollar denominated card, or euro denominated card, or pound sterling denominated card. You use your naira card in Nigeria to buy a ticket. But because the banks, the airlines are now saying that we cannot get this dollar in the market, we say come to central bank and take it. But at least we take off that bunch of demand from the market. And if you are going to exchange your ticket to naira, you will see that the airlines are using one outrageous rate of the naira. It's because they just think that, okay, if we can't get it from central bank, we have to go and look at it from the black market. So we try to use several avenues to address that, and also capturing the remittances of Africa. In short, that is even more critical to us. We see a lot of Nigerians that are doing businesses in Ghana, in Kenya, in Syria alone, and they also, some of them are doing very, very successful businesses and earning a lot of income, and also want to impact on the domestic economy of Nigeria. So we're also targeting those groups, and it's in a very sustainable manner, so that we can also get, so we're not just concentrating. The most important is that the largest volume is from Europe and in the US. However, these smaller units are also very, very key, so that they can have access. And from that side, we can tap more of the informal sector. Yes, the issue of autonomy. This is a very highly beaten issue. Central bank has what we call instrument autonomy. So if we are going to adjust monetary policy rate, we don't need to tell the president or the National Assembly. If we are going to mop up liquidity in the market, we don't need to tell anybody. The central bank management, which is called the Committee of Governors, sit down and say, and the Monetary Policy Committee says, okay, this is what is going on in Mali, like Dr. Edobo mentioned, whether we're expanding credit in the domestic economy, where interest rate is still going high. If you see those parameters changing in that direction, the committee sits down and take that decision without allowing the public. Nigeria knows the same time the president, the Senate president, the market seller, they get that information at the same time. Even when we do the Monetary Policy Committee, very limited number of people are allowed in there for those so that those information will not leak. So after the Monetary Policy Committee, we go into what we call a communique reading. So everybody get that, banks and people get that at the same time. So for instrument of policy autonomy, we have it. But like you understand, most of these developing economies, you don't have absolute autonomy. Number one, the person is appointed, the governor of central bank is appointed by the president of the country. The governor will not sit down and say, damn the president, this is what I am going to do. You still have reporting channels, but we have no any underlining channels with the Minister of Finance. Before now, as the ambassador will also know, central bank was under the Minister of Finance. But I think since in the 70s or early 80s, that has changed, even before this 2007 Act. So we don't report to finance, and finance is purely the fiscal side, and central bank is the monetary side. However, we have a common boss, which is the president. And also today, I went to the National Assembly with my deputy governor to present the central bank budget to the National Assembly. So there should be checks and balance. So we can't just say we're an island on our own, we can do what we like. So we have that, but that is the much I can say about the autonomy. But in terms of our policy instruments, we have absolute autonomy over that. We decide on what policy to use at what time without consulting with the legislature or the executive. And then, yes, I agree with you that the era of Soludo and now, or even before now, is different. That is also relating to the economic circumstances, the political superstructure that you have on ground, and several other things that the ambassador even knows better than me. But however, given the current template, the central bank has a lot of leeway. All these interventions that we're doing, we don't need the presidency approval. We do it just in-house. You look at the economic fundamentals and you take it and you justify it and you make sure that it impacts on the rest of the economy. I think I've tried to exhaust Dr. Ambassador's Mayegun's questions or points. Some of them are actually comments that we need to take home and also dwell on. Dr. Edobo also mentioned very, very fundamental issues, the primary function of the central bank, and if the central bank is not able to meet this, and you mentioned, those parameters that are actually key in our mandate. Inflation is going up, GDP is going down, exchange rate is depreciating, interest rate is rising. So are you not achieving a mandate? Well, economic fundamentals are highly dynamic. And what is important is that while inflation is going up, central bank function is to bring it down. So after a particular time, if you are not able to bring it down, then the bank has failed in that its function. However, you also have to be cognizant of what is driving that inflation. Is it under the control of the central bank? And I mentioned severally and I'll come back to one issue that Dr. Ambassador mentioned on the monetary implications of, Dr. Konko, I don't know who mentioned it, on the monetary implications of injecting money into the economy. So the point is inflation, including, that was you, yes. Inflation, including interest rate, are largely driven by structural fundamentals. Structural in the sense that they are more of long-term structural distortions in the economy that is driving that disequilibrium we are seeing rather than monetary phenomena. For example, food prices. You find that, yes, we're doing credit expansion to produce food, other people are going into farms and this, but food prices are rising. So what is making that food prices rise? Apart from the environmental, the climatic conditions that I mentioned, there are other structural factors, including storage. People that produce foods that cannot even store them for the next season. So at any rate, they have to dispose them of within 3-4 days. So in the next season, those foods are not there. So they are scarce, no silos, no storage, no cooling system. The issue of transportation. Things are produced in the villages, you go to the farms and you see yam and whatever rotten in the farm because there are no roads, rivers have blocked the road, vehicles are not there, transportation comes once in a week, so we have those structural issues that central bank is outside the purview. We call them exogenous factors to the monetary template that are affecting that. But most of the intervention programs we're doing are also to target that, including providing those roads, including providing, easing those transportation facilities, including affecting securities and stuff like that. So yes, I agree with you that if all those parameters are going up, then the central bank mandates are not being achieved. Yes, we agree that those are challenges that are within the economy, which are exogenous to the central bank, because central bank policy tools are for short-term management. These issues are long-term structural issues that needs to be faced by the fiscal authority and the rest of the economy to drive good, including agriculture. You can't force banks to lend to agriculture. They are private businesses. You can only regulate their activities that they conform with the regulatory guideline. But you can't tell a bank that go and invest in furniture, go and invest in rice. Go and, no. It's their board decision, but we'll just use encouraging tools to allow them to go there. And that's why we created the NISA, to de-risk that sector. So we share the risk of that sector, because you can't give a loan to someone that doesn't have address. How do you collect back the money? You can't even go to the person's farm if you're not from that village or from that environment. So we try to de-risk that agricultural sector so that banks can lend to that sector. So, but right now, central bank even lend directly to farmers. You have the anchor borrowers programs where you lend directly to farmers. But even that lending is not giving the farmers the cash, but giving them the tractor, giving them the seeds, the well-researched, high-yielding seeds, giving them the pesticides, giving them the fertilizer and stuff like that, and then netting it out from their loan. So we have that going on, and like Dr. Edobo said, everything we do is targeted at bringing down those inflation numbers and also stabilizing the exchange rate. All these issues I mentioned about remittances, diaspora fund, is to bring in supply such that the exchange rate will be the appropriate exchange rate that is driven by the demand and supply, or our level of trade within the international community. So the exchange rate is supposed to be stable so that people can plan, investors can also bring in their funds and be sure that stable and available and be able to take their funds out. So it is dynamic, and we're to also address that. Are the banks fulfilling the LGR, and why is their SMEs not having credit? I also mentioned it in my analysis that yes, central bank is still, and I think Ambassador also mentioned, trillions of naira out there, but people are not accessing it. And it's part of the KYC and other administrative bottlenecks that I said, the ease of doing business. And we're addressing that also significantly, such that the accessibility is a lot quicker, smoother, more transparent, and more efficient.
Hello?
So that if you are looking for money for rainy season and you don't get it on the dry season come, then even if you get the money, you just use it for something else. So it is very important, the timeliness of credit getting to the SMEs and even the corporates. It's very important, and the bank is doing that. The point I also want to emphasize is that the output gap potential is so large that what central, even like in the rice project that we have done, even with the trillions of naira we've spent, we have not even contributed to 12% of the whole there. So we have very big market. We have over 200 million people. Every of that 200 million eats. Even the baby that is 5 months old eats something. So we have this market, but the production level is just far, far below the demand we have, and that is also driving the inflation numbers, particularly when now that we are doing injections in terms of stimulus packages. People have money, but the food to buy is not there, including the security challenges we have. Why is Dr. Edobo also asked, why is the MPR so high in a period of crisis like this? I will want to expand credit. Yes, I agree with yes. Now I remember this money issue, the helicopter money. I agree with you absolutely that when you pump money into the hands of people and there's no production, straight it goes to inflation, because everybody has the money and then it's not there, and price. That is very, very correct, and I agree with you with that. However, in the period of crisis, you also need to while you are driving, supporting supply, you also need to support demand, and you can only support demand by creating employment. And if you don't have the employment, then you have to put money in the hands of people to buy off those things in the market. Yes, the MPR is so high. Number one, during this crisis, we started from 13.5 in January, and you also read out those numbers. And right now we're at 11.5. And also the corridor of the MPR was actually 200 minus 200, plus 200 minus 500 basis point. We are now at plus 100 minus 700 basis points. So we will still lower the MPR so that all rates will go in the market. And I can also tell you that more than 70% of the SMEs and the manufacturing sectors, more than 70% borrow at less than 10%. Now, 10% or less. Before, what we call the maximum lending rate was like 32%, 33%, even up to 40%. And you see the deposit and saving rate about 4 to 5%, which is even less than that now, even for fixed income. So even for fixed deposit, term deposit. So we are also interested in narrowing that gap to make accessibility to funds. Central Bank actually lend for these SMEs and stuff at 5%, and we're extending that lending to by another 1 year. I think I've tried to answer most of the question, Dr. Edobo.
Yes, thank you very much for the answers you have given. Quite elaborate, although the issue of the bureau, the change, why it is not regulated, is still, maybe we will address that a bit later. The money that goes to the bureau, the change, we all know that those money disappear into the votes of individuals in Nigeria who buy the money to store in their votes because of the poor storage ability of the Naira. But we will come to that later. I want to give the participants the opportunity to ask questions. So there have been some questions coming in, but maybe these people will want to ask their questions directly. So there have been Mr. Ike Okafor, Mrs. Aliyu, and Mrs. Lola Visa Mabogunje. They have raised some questions. I would like them to ask the questions directly. Mr. Okafor, you were the first person to write that you have a question to ask. Can you please ask your question now?
Good evening, everybody there. I appreciate the very presentation of Dr. Hassan. It was very interesting, very educative, very academical, and I appreciate that. It shows a sign of we still can believe in our own system. But that notwithstanding, I still have a problem in trying to understand when different nations within this pandemic period have a stimulus for their people, and Nigeria, as he presented in the graphic, has also. My question is this: is it transparent enough where this stimulus went and who could have profited from them? That's question number one. Question number two, he mentioned about 28% of job-seeking individuals in Nigeria. The question I want to ask on that is, does the central bank have a central statistics of job-seeking unemployed people in Nigeria? And what are the measures we use to measure this unemployment in Nigeria? Because we do have here in Europe a different setup of statistics. I don't know how it is measured back home. Third question is this: does the central bank, in search of monetary policies, create a stimulus that support researches that will bring Nigeria away from a consuming community or country into a producing community or country that will affect financial inclusion to a very wider population of our nation? That's the few questions I want to ask.
Okay, thank you. I will take a few questions, Dr. Hassan, so that you don't have to answer everybody individually, if you don't mind. Madam Aliyu, what are the questions you would like to ask Dr. Hassan?
Okay, thank you, Dr. Jones. Dr. Mahmoud, that was a very brilliant presentation. We appreciate it. But I want to ask my question from the base of the fact that I'm a business development professional. And if you look at our debt trend, from the time that we got the debt relief, I believe it's 2005, up to now, the foreign exchange issues, which we are all familiar with, I'm not going to take us back to that. It's been nothing short of disastrous as far as I'm concerned in the international market. What do we need to do? I mean, we have attended so many seminars, conferences, workshops, presentations like this. And I see that until decisions are made that affects that ordinary business on the street and that ordinary person on the street, there's really no impact based on what I'm saying. So I don't know what central bank has in place to monitor the trend of things and to create solutions, because I see that in Nigeria, most of the things that is affecting our businesses, especially in the international community or in the global markets, it's our politics and policies. If you talk, for instance, of these palliatives we're talking about and stimulus, there's no standard data base in Nigeria. If they're going to give palliatives, it's going to be politically motivated, and that's not going to work. I remember several years ago, they started with the national ID card, then we went into NIM, BVN, HINEC, and this and that. And even as we speak, there is no standard database that you pull any information of Nigeria. Even if I go to the Nigerian Bureau of Statistics a lot, and even then they are trying their very best. So how can you, all of these beautiful, brilliant presentations and the vision and policies that you are working on, how do you intend to make it work if you don't have the right data? I guess for the international community, they know us very well. They use that as a singular mode of keeping us short, you know, so that when they don't want us to talk, you know, they tell us we don't have the data. So I am just thinking that the central bank can take the lead in one way or the other to find a way to consolidate this data. Even if it is not accurate, at least it will be close to accurate so that you can project properly. And of course, there are solutions to that, but I would like to hear the central bank solutions. You know, I have a few things that I have that I can share afterwards. Thank you.
Okay, thank you, Mrs. Madam Aliyu. Can I call Madam Lola Moboganju to please ask her questions?
Yes, brother.
Okay.
Good evening, everyone, everybody. Good evening. Let me first thank the presenter for the excellent job you've done. Thank you very much. I wrote a piece of my concern because central bank is too much involved in interventions instead of policy. Number one. Number two, there's a lot of policy somersault that makes investors a bit skeptical. Let me a bit tell you my background. I worked with Aganga when he was Minister for Industry, Trade and Investment. And I was the one in charge of the performance monitoring of the ministry and of the parastatals. And I see that CBN gives a lot of interventions to Bank of Industry, a lot. And for me, really, I think it's time you start measuring the impact of all this intervention, because you cannot be giving out intervention and you don't sit back to look at how effective is all these things you are doing. That's important. And number two, the policy area is a bit of concern to some of us in the diaspora, because I helped the NITCOM chairman. I was part of the team that we developed the Nigerian Diaspora Investment Trust Fund. We've just done that, the framework. But what people are saying is that, you know, you go to Nigeria, you are investing, by the time you know it, CBN comes out with another policy. You see, it's something CBN needs to look at. because it's too much of a policy somersault. Thank you very much.
Well, thank you very much, Madam Lola. I would suggest that the Director of Monetary Policy takes those questions. But before he does, allow me to just chip in something which I already mentioned. I wonder if the central bank with the interest rate policy is actually looking at the equity market and trying to attract equity investment instead of focusing on the domestic market. I just wanted to add that to the questions that have been asked. So please, Dr. Hassan, thank you. Over to you.
Okay. I hope I remember this your last question. I'm just trying to write it down. Anyway, okay, let me start with Ike Okafor. Is the intervention processes transparent? That's a very good question because it's extremely important given the issues we know of the economy, and like Madam Falashade, Madam Lola also mentioned. No, yes, Falashade was the one that addressed the issue of data. Was she the one?
Yes, she's the one. She's the one.
Was the one, yeah. So it is very critical, and the central bank, needs to have a lot of integrity for the market to believe the bank and the market to also trust the bank. If we're keeping the resources of the whole nation, then it is very important that that transparency is key, and it is a very, very key concern of the central bank. And I will be addressing some of this in the issues that Falashada Aliu also raised. So in terms of transparency, let me just even give an idea of how we do these interventions. One, the central bank creates these funds. And when you hear 1 trillion, it doesn't mean that 1 trillion entered into the economy. We created those funds, 1 trillion, but it depends on the accessibility of those funds. So we can have a rolling 1 trillion for 1 year, and in that 1 year, only 200 billion was drawn down. So it's only that 200 billion that is technically the money that has entered the economy. So while, for example, I'll give an example of the 1 trillion we have the manufacturing sector during this COVID-19. Of that money, as at the last MPC we did this month, only 350 billion has been drawn down. We have a fund they call the PIVE, Power, Aviation, and something fund, which was about 300 billion since 2012 or 2013. That money has still not been exhausted. So we have a lot of this intervention, but the actual money that is hitting the economy is less than that. Several issues are involved in that, and if we have the chance, we'll be talking about them. But I'm still addressing the issue of transparency. So what the bank does is that since we don't lend directly to the public, we lend to government and banks. We don't have the skills or the manpower to monitor these facilities in terms of going to, just like banks monitor their credit. We don't have that facility in the central bank. We are regulators. We are not retail bank. So we give this money through banks. And I think Madam Aliu mentioned it, I think, or Lola mentioned it. We take this money through bank, either Bank of Industry, either through commercial banks, and we give those funds to a bank at a rate, of a margin, and tell the bank that we're giving you this money at 5%. Take it out and on-lend to the public at 7%. So you have 2%. That 2% that bank is taking is for this monitoring mechanism and stuff, because they have the already infrastructure on ground and the capacity to do that. So we have taken the risk to the bank, and we pay the bank a premium for taking that risk. So the numbers that we reel out from central bank are the actual numbers of the disbursement that we have done. We have a template that you can access, and however, bank transactions are not in the public domain because of other issues that you also are aware of. Those are that are the financial sector. However, I can assure you that we have a data template which is automated, and that will have thorough, detailed, and granular analysis of this number, and also through an automated system monitoring the disbursement and the what do you call it, amortization of those funds. So in terms of transparency from the central bank side, we don't have any issues with that. But like the general environment is now, we will not be surprised if there are concerns of data integrity and stuff like that. It's just a major problem we have in the economy. Ike Okafor also asked, does the CBN have employment statistics? Well, both the employment and GDP numbers are released, and even the inflation numbers are released by the National Bureau of Statistics, statutorily. But we also do our own computation, but it's just for internal consumption. Because officially, you can only take the MBS number on GDP, on inflation, and on unemployment. And those are the numbers the central bank use for their monetary policy analysis. Because you remember, Mrs. Lola Mabojokun will remember during those eras where Minister of Finance will come up with this number of inflation, central bank will come up with this number of inflation, and we are having a lot of confusion, and investors were highly disappointed, particularly international community, that how can this be coming out from a country? So there was this need for harmonizations and laws that said, okay, we have a Statistician General of the Federation, and the only numbers that can be accepted for any policy issues, the numbers from those from that statutory body. And I know the statistics engine, the National Bureau of Statistics has improved significantly. They had funding from the IMF and the World Bank, including technical assistance in terms of this data rendition. So there's a lot of improvement there. There still need more to be done for the granularity of the data, because like Okafor said, there are still issues of the definition of unemployment, because if you look at it, and you find out that the numbers that are mentioned is 6%, and then you see that. But if you go to my community, almost 70% of the people are not even having jobs. So we also agree with that. But that is the position on how we do. So we don't keep unemployment numbers. We take it from the MBS. And Okafor also mentioned, does the CBN create stimulus research? Yeah, we have collaborative research that we do with academia and research institutions, and we also finance projects in universities, particularly what we call centers of excellence. And with this COVID that came up now, we also had a 100 billion naira research fund for researchers that are scientists, pharmacists, that can, they can bring a project. We have a committee of professors, professionals in those fields that can assess your project and see if this is a viable project, and we fund it based on, because we don't have the technical expert to know whether this research is particularly scientific research. We also do a lot of social researches with economists, financial analysts, agriculturists, and we finance those research. Professors do a lot of work for the bank, and even doctoral students. We even also doctoral research that are related to many of these studies. So Folashade Aliu spoke about the debt relief. First problem is disaster. The effects is really a big problem. But I mentioned it too. It's a highly distortionary market, and I mentioned also that market, we are just intervening there because the market has failed. And then I will also tie that to the question that was raised by, I think, Lola on policy somersaults. You see, the Nigerian environment is extremely complex. I know a lot of you live in diaspora, but you have a good relationship at home, and some of you have also worked at home before. It's highly, and that's why many of you, when you come back here, you can't stay long within the system, because you are used to a system where things work. Here, when policies are designed, we have operators, experts, that their main job is how do I put it? How to rigmarole around beating up that policies, and they will do it in a legal way, so that you don't have any legal. They are looking for loopholes. They are looking for how to circumvent that policy too, and that's why sometimes when you do policies under rational expectation, the next day you have to change it because you've seen a particular behavior that is abnormal and that was not captured in that. It was not that the policies were not done with thorough analysis or with high robust engagement with stakeholders, but you just find criminals, that's the word I will use, in the system, professional criminals that are just finding ways to circumvent policies. And they call it smartness. They're able to beat that policy. And that is very common in the FX market. So while we're also worried about supply, we're also worried about demand. Because if you look at, I told you the BDC market, what we give them in a week is less than 70 million. But you will see somebody go to the FX, particularly when you have some major events in the country, politically related events, and somebody goes to the BDC window to raise $5 million. And everybody will scramble for the dollars. And that person is not saying, I'm going to pay 500 to a dollar. He's just saying, I need $5 million. So you bring the 5 million and you just tell him the naira is to give you. He's not asking you what's the rate. Because in any case, he's not getting the money through a legitimate business. And secondly, he's not even using the money for a legitimate business. So the cost effect is not there. And that distorts the price. Because I also mentioned that there's a high pass-through from inflation to domestic prices. And Dr. Edebo, you also mentioned that the exchange rate depreciation impacts on inflation. Because the person that is selling yam will also tell you that the naira has depreciated, so it's going to jack up the price of yam, even though everything about the yam is domestic, has no international relations. So the policy, the complexity of the market, and the uncertainty of the market operators, the behavior of the market operators also impact on the efficiencies of policies. And this is also so because of the weak institutions that we have, or the weak administrative mechanism that we have. The punitive measures to address this is so weak that you can get away with it, and the system is so porous. And so it is a vicious circle of uncertainties, and we just need to work within that environment and get out of it. Do we have a standard database on the palliative? Is it politically motivated? Well, the ones from the central, you saw what happened. I don't know whether you got the news about this 774,000 jobs that needed to be created, and the political issues that went around it. I think up to date that is not hitting the floor yet. In this environment, political influence it's very, very, it's a major issue, but it also depends on the integrity of the political office holders. Because if you also have the interest of the nation and the people at heart, then your intervention should be beneficial to the populace. But where it is now myopic or self-aggrandizement, then you have distortion in the system. But in terms of standard data on our palliative that we've given out, I just see the same answer I gave to Ike Okafor on the fact that we have the numbers. Do we have an evaluation of the benefits or the successes of these also interventions? Yes, we do. And even in this, I told you that we had a GDP decline of minus 6.1 in Q2, and then that contracted to 3.64 in Q3. That narrowing or moderation in contraction was largely due to interventions of both the central bank and the fiscal authority. So it's impacting, it's creating jobs. But like I said, the whole is just too big. So, and central bank is not Nigeria. It's just an institution part of Nigeria. This is supposed to be 100% the role of the fiscal authority. But we all know that the fiscal authority does not have money. So it will be irresponsible on the part of central bank that my role is just this. So I will sit down and then you go and do your role. The central bank will also fail. We are failing in our mandates now, like Dr. Edebo said, because of the other complementary parts of parameters that are required for us to achieve our mandate. So we went into intervention not because we want to spend money, but because we want to achieve our goal through another side, which is the supply side, because we are supposed to manage demand in the short run, not supply. Supply is a long-term issue. So that is there. So we need to also look things holistically. And Lola Mabogunje talked about too much involved intervention. I think I've mentioned that what we're doing is still less than 12% of what is needed in the economy. And you also know, you are in finance before, that even before the crisis, finance could not even do 10% of it. But what is important now is and I agree with everybody that has mentioned issue of CBN too much involved. We need the private sector to wake up, to take over this. And that's why they're creating this infra. I don't know if you have heard of it, the infrastructure company, which is trying to raise a capital of 15 trillion naira. Of this 15 trillion naira, the only thing that will come from the state, including central bank and fiscal authority, is 1 trillion. The rest 14 trillion is supposed to come from the private sector. If you have a viable private sector that is strong and robust, central bank doesn't even need to be doing all this in the private sector, we take it off. But if you have a country ridden by poverty, which private sector, who will take off all this, the effective demand is not there. So we are doing this temporarily and hoping to create the private sector. There's a fund we call Commercial Agricultural Intervention Fund, CAX. And that fund is for big time farmers. So that when you build those, like you have Dangote now building a refinery, that is the end of NNPC. Or what do you call these other refineries in Port Harcourt and Warri? Nobody will talk about them. These guys will be producing how many million barrels of petrol in a day, and it will bring in huge money. We create jobs, we create what we call backward integration in economies, other petrochemical industries in the system. If we can have 10 of Dangote, you don't need central bank. You have vendors. If you go to, is it Bangladesh? This Green Bank, which is a commercial bank, is raising trillions of dollars and is the main lending body in the country for small enterprise. So we need that, but we can't sit down that we don't have the private sector, we don't have the public sector. Well, let's sit down. That's not our business, not our mandate. We're part of the country, and we need to also play on that. And Mrs. Mabo Gunjai also talked about the policies of myself, which I already answered. That it's just the market behavior. It's so complex. It's so dirty. People are just, I don't know. No sense of integrity, no sense of professionalism, and I also mentioned that is because institutions are weak, legal and regulatory framework are also weak, and we also have issues of regulatory capture and stuff like that. The person you are controlling is telling you how to control him and what you should ask him to do or not to do. And then the last one, okay, Dr. Edobo, is the CBN looking at the yes? It's a very important question, Dr. Edobo, that you asked. Is the CBN looking at the equities market, or we are just concentrating on the domestic market? We have what we call the foreign portfolio investment. Right now, it constitutes about 20 or more % of our reserve. And that is a major issue in our foreign exchange discussion. Because anytime these foreign portfolio investors find uncertainties or signs of disequilibrium in the economy, they want to move out because they are short-term money, they are portfolio funds. And when they want to move out together at the same time, the entire nation start panicking because we don't have the effects for them. And then Naira start depreciating. So we also are making deliberate effort that the market is so suitable, liquid, and transparent that these guys do not panic to go out. They always give example that even during the Afghanistan war, investors were going to Afghanistan to invest, even during the war. So we don't want small uncertainty. Oil prices going down, investors are pulling out. So we need to make the market extremely efficient, highly liquid, such that they can come and go out at any time. However, we're also looking at the domestic market so that we can raise funds domestically, and all those other funds that I'm talking about should be raised from this viable private sector. I think I've tried to address the few questions that I got now.
Well, Dr. Hassan, thank you so much. I mean, I wish to appreciate you for how detailed you go in answering the questions. I also appreciate that you have been with us now for a couple of hours, which is far longer than we planned. So thank you so much for your patience. So we are going to be rounding up now very soon. But before then, there are some few people who have raised their hands that they have a few questions to ask. So I'm going to take those questions, and afterwards, I'm going to go back to the panelists to just make final statements before we then round up, So I think from the list I have here, I think Dr. Bashir Obashekola, the chairman of NIDO Europe, has raised his hand. I think he has some questions to ask. Can you please do so briefly, because we are rounding up now so that we don't take too much more time. So please unmute your microphone and ask your questions.
Yeah, thank you so much, Dr. Azam Mahmood, for that beautiful presentation. And I think it shows that we have a lot of professionals who are actually, up to date and informed of what they are doing. My question is, being the chairman of Nigerians in Diaspora Europe, is around the remittance and the issue of accessibility of those funds. Although I know you have mentioned it, if the central bank is actually, assessing what the funds that are available, like anchor borrowers and all those, intervention funds that you mentioned. And I was also happy that you mentioned that out of trillions, sometimes it's only 200 billion that is assessed, throughout a year. So do you actually, what are you doing to reverse that case so that when funds are available, people or sectors actually assess them? That's one. The issue of remittance, because it concerns diasporans, recently, while we're, commending the central bank for what it's doing in terms of making sure that the billions that are being sent by diasporans are actually impacting on Nigeria economy by by reversing or adjusting some of the policies around the remittance. The issue of remittance came into line when somebody, I don't know where, either a rumor or somehow, that the remittances will be taxed in Nigeria. I just want to know your professional view about that, if that is being contemplated by government in Nigeria. What do you think will happen, or what the impact of that on remittances that is coming from diaspora, if their money that they have already paid taxes on in their locations comes to Nigeria and is being counted as income, and it's also being double taxed? So what do you think will happen? Thank you so much. And once again, I commend your presentation. I hope probably in future we'll be able to talk more on one thing which I finally question is the issue of unclaimed dividends and dormant bank accounts. I that the federal government is about to dip its own hands in that sector of fund. I just want to also know your opinion about that. Thank you.
Thank you. Thank you very much, Dr. Bashekola. Let me just interject before Dr. Hassan, answers, that the issue of accessibility mentioned that the interest rate for lending has gone down substantially. I was just wondering if the interest rate is not a major factor, because the interest rates are so high, and for most small companies in Nigeria, it is almost impossible to invest those money and make the profit to pay those interests and then be able to sustain their businesses. But that is just to interject into the issue of accessibility. Dr. Henry Ogwine also raised his hand. Can you please add your question? Please be very brief. Can you unmute your microphone, please?
Good evening, all, and thank you, Dr. Hassan, for your presentation. It's quite well structured. I have a question, and it was directed both to you and to Dr. Konkwo, because of the issue of the remittance. He mentioned that you spoke briefly on it. The question is simple. I even had it written down in the chat that since the monetary policy mandate of the central bank revolves mainly around the management of favorable exchange rate, balance of payment, and terms of trade, considering the shortfalls in oil revenue and the emergence of diaspora remittance as the most prominent forex source, actually, diaspora remittance for the past couple of years have been bigger than foreign direct investments. So my question is this: how can the diaspora collaborate with the CBN to enhance the forex earnings of Nigeria? Thank you.
Okay, thank you very much. So before we go back to Dr. Hassan for the last time to ask questions, is there any other person who has raised his hand that I have not noticed that has a question? Can you unmute your microphone and ask your question very briefly?
Thank you, Dr. Hassan, Dr. Debo, and everyone. Good evening. So I will also add to comment you on the very well-presented presentation. So my question is this: considering that the world dynamics is changing, okay, technology is becoming very forefront, especially as it concerns money and money policies. Some countries are even now, central banks of certain countries are talking about implementing digital currencies as a national currency. So my question is, what is the CBN doing in terms of digital money and artificial intelligence as it concerns fiscal policies and bringing change to the economy? Thank you. That's just my question.
Okay, thank you. So I think we have all the questions. So is there anybody that raised his hands that was not noted or not observed? Okay, so we go back to Dr. Hassan to answer the last questions before we begin to round up. I mean, thank you so much for the time you have spent with us. I really appreciate that you didn't say, look, I have to go. It's already 2 hours. It's already 1.5 hours. And you have stayed with us. So thank you so much. So please, over to you.
Okay, thank you very much, Dr. Edebo. Dr. Bashir, thank you very much for doing words. How do you enable access to funds, given your comment? Yes, I think I also touched on this. The key bottleneck is this administrative procedures of the credit raising mechanism or the accessibility. And the consensus is that let us ease this access. Let us ease the collateral requirement. Let us ease the conditionalities, because we know the fundamentals that we need to drive. And that's why I also mentioned the tiered KYC stuff, particularly for the SMEs. So, but like someone mentioned in the earlier question, this issue of data and automation. These things require huge technology, and even if you develop the technology or the solution to these accessibility issues, you also need the operability of those technology with other platforms in the system. So it's a complex infrastructural issues. And then, but I know the central bank, one, is automating the target credit facility of the 300 billion, so that you can just access it from your DEX, and then you get the money credited to your account, so long as you have a BVN. And then the others, we can monitor on that. And other ones for the SMEs also is to ease the administrative processes. Now worried with. All right. Yes. Okay. So I was answering Dr. Bashir's point and talking of the making the access to the. Yes, Dr. Bashir, yes, remittances will be taxed. That will be very counterproductive. And even if there's an attempt to do that, I can assure you, Central Bank will do everything possible to advise government. Thank God we're advisor to the government, that will be highly counterproductive. We're trying to, as much as possible, reduce the cost of remittances so that it will be more competitive, and also provide incentives. I don't have all those details, but I'm going to be sharing it with Dr. Edebo when those numbers come out. And if there's a platform, you can splash it to other members in diaspora. And the Diaspora Commission will also do. You are in the institutional sphere, so I'm sure when we do the stakeholder engagement, even from the domestic side, there you get those details. But right now, we're engaging with the Diaspora Commission in Nigeria on this, and they are all also in constant meeting with the central bank, the Trade and Exchange Department, on how to create all these instruments. So even if it is being muted, it will not fly. I can assure you that we'll try as much as possible. There are other sources of tax creation here domestically, and this will be one step forward, two steps backward if we go and tax remittances inflow. The whole thing will just cease, and it's our own loss, because people will still find way to get money to their relations and their businesses. Yes, unclaimed dividends and dormant account. This is a very heated issue in Nigeria now, and there are also clear indications now there are huge legal implications, and lawyers, the learned colleagues are already sharpening their pens to deal with that. So I have seen a slowdown in that. Unclaimed dividend, the people that are lawyers know this better. I don't think any government will just dabble into that sphere without taking appropriate legal measures. But there also saw another one that dormant domiciliary account will also be wiped out. Central bank, it's not possible. I don't think we have the resources to fight that in the law courts. So I don't see that coming up. And Dr. Ebo added, when you asked a question still on the interest rate, that is still very high. And then if you do that, how can the people pay back? It's a very critical point. And like I mentioned, central bank facilities are less than 10%. Actually, they go for 5% now. But that should not be the benchmark. Banks are also expected to lend at a very lower rate. And I mentioned that more than 70% now get facilities at less than 10%. We still have others that get above that, but we want to bring that as much as possible, because it's a main determinant of why. But don't forget that while you are bringing that interest rate for lending, it's also discouraging investment and savings. So you have to balance the other side. Right now, our money market is having negative real interest rate. So it's not profitable. Treasury bills are 1% and below. So you don't attract that resources to be able to also lend at lower rates. So you need to balance both the supply and demand side. Dr. Henry, diaspora funds, whether we are engaging with the diaspora community, yes, we do that, and they're also part of the stakeholders engagement, but at institutional and group levels. We don't do it at individual level, but it is very important that we take those relevant and critical stakeholders in that engagement process. So yes, we're doing that, and we're going to be enhancing that through this automation. It's a lot more efficient now, Seth, that we have this virtual platform than the former one that we have to do roadshow and spend a lot of money to fly to those countries. We can do a virtual meeting now with 500 people online, and then you can send your message out. Dr. Ogochukwu, yes, you asked the question, what is the CBN doing for digital money? It's a very important thing, and we discuss it at our management meetings. Central banks are even adopting digital currency, even the Fed, even the Bank of England, and even the conservative Southeast Asian countries are also adopting digital currency, and including cryptocurrencies, and using the blockchain or the digital ledger. So that is the terrain now, and we won't be left behind. The Central Bank of Nigeria has launched a lot of studies and engagement with professionals in this area to understand it. When the whole thing of cryptocurrency started, because of the danger that it was, the risk it was taking to the financial system, we gave a caution notice to the public that, well, we are not regulating this sector now. So if you want to engage in it, you do that with a lot of prudence. We are not you can't even stop it anyway, because it's virtual. It's not something that you can close somebody's office or close somebody's terminal or server. So, but yes, we are taking this very much on board. We're into also digital banking. We're encouraging banks now that are 100% digital. You don't need to have an office. And we've issued a license to a bank that is trying to operate that. We have other banks too that are also going more digital. We're adopting fintech. We're also financing the sandbox where innovators come in and launch their solutions, digital solutions, and they are appraised within that sandbox. And we also have those startups. So we are very much involved in that, but we are still learning, and we want to also pick up on. We don't want to be left behind. Thank you very much, Dr. Edoba. I think that is
Absolutely.
much.
Absolutely. Thank you so much.
Mm.
You have done so well. I mean, it's so to round up, I'm going to call on the panelists who have been silent and waiting to talk to make a final statement before we round up. But one thing that is now obvious is that, as we can see, we can't finish this debate in one webinar. So maybe we may have to come back to continue where we are stopping. So the panelists, may I call on Dr. Konkwo to please make his final statement? Many have spoken, and so please be brief in your final statements. Thank you.
Thank you very much, Dr. Jones. When I thought I was already blown away, Dr. Hassan blows us away again. I think I'm not the, the only person who has been blown away this evening. Let me use this opportunity to address very briefly a question that was posed to me by Dr. Henry Oginga, as well as to Dr. Hassan. It says, considering the shortfalls in oil revenue and the emergence of diaspora remittances as the most prominent forex source, how can the diaspora collaborate with the CBN to enhance the forex earnings of Nigeria? Well, I really thank you for this very important question. We have tried to address this question at the beginning of this meeting tonight. And the director has mentioned here that the recent statistics on remittances has been in the neighborhood of $22 billion. And I add, that is actually only the official statistics. The unofficial statistics has that almost multiplied by 4. So the approximately 18 million Nigerians in the diaspora send enormous amount of remittances to Nigeria every year. Now the question is, why is it not impacting our economy? Why is that money not making a change, a difference in our economy? And the fact is that a large chunk of that money does actually not reach Nigeria because a lot of service charges are deducted at source here before they even get to Nigeria. Then the issue is, how can we have observed that the CBN actually is more or less more inward looking, more inside looking when it comes to issues concerning remittances. But what is stopping the CBN from becoming a player at source in the diaspora where this money is sent to Nigeria? And a lot of, which has been said that about $6 to $7 billion service charges are deducted from annual remittances of about $25 billion every year. So why is CBN not thinking of being a stakeholder, getting a large chunk of that service charges cake that are distributed here in the diaspora even before that money reaches Nigeria? Dr. Ogringe, I'm aware that you are one of the very silent powerhouses, financial powerhouses powering the European financial industry in Luxembourg. I don't need to introduce Luxembourg as the capital, financial capital of Europe. So I'm also aware that in your own framework, you have a team that has developed a very specific, diaspora-sensitive Nigeria, possibly Nigeria-owned instrument facility for giving Nigerian banks and possibly a fintech, an integrated fintech facility domiciled here in Europe, where the Nigerian banks, together perhaps with the CBN, can be present in Nigeria, in the diaspora in Europe, owning an instrument, a facility that can enable Nigerian financial institutions to become stakeholders in channeling these remittances to Nigeria every year. So the director has already mentioned that, has already addressed this issue. Maybe we can explore it further to see the possibilities of collaborating with the CBN, as we have suggested, to create a diaspora-owned or Nigerian-driven facility here in the diaspora in Europe that can organize and channel these remittances to Nigeria instead of leaving it into the hands of foreign IMTOs.
Thank you. Please, we have to make it very brief now. The director has been on the road now for so long. It's going to be 9 p.m. I understand he has been in the office since in the morning. So anyhow, it's not your fault. It's because we had technical problems at the beginning. So let's be very brief now so that we can round up. May I call on Ambassador Mayegun to please make his final statement, please.
Thank you very much, Dr. Edabo. I'm going to be as brief as I can. I'm not going to start another presentation, but I think I want to start by really expressing my personal appreciation to Dr. Mahmoud for his patience and his brilliant presentation. Like I said, he has beaten my expectation, but I'm also very happy in his acknowledging that that we can use financial, our monetary policies to ensure inclusiveness and in terms of sustainable development. Some of us will be willing to provide you with ideas as the bank itself is trying to put those things together. We will be at your disposal 24/7. As for the remittances, I'm not going to speak on your behalf, but I think most of the people on this forum, regardless of what their views are, I'm not so sure whether central bank can do what I just heard from Dr. Okonkwo now, but I will leave that to Dr. Mahmoud to defend. But suffice to add that I've worked with the European Union Commission. They are all signatory. They are all part of the efforts to ensure that the cost of remittances all over the world is not more than 2%. Right now in Africa, it's only Egypt. Some corridors, as I will call them in Africa, has met that 2% threshold, if not less. We can learn from the way they've done it, and one of the something that he mentioned, that Dr. Mahmoud mentioned, has been Egypt. We just need to see the corridor, and not the entire Egypt, not the flow from Europe to Egypt. Is a flow, is a corridor from the Gulf to Egypt. We just need to learn. I know how they do it. We can learn how to, they've done it. And I hope the central bank will continue to improve on measurement. Two things are at stake here: measurement, improved measurement, and ensuring that remittances is safe. When it is safe, people can move from informal to formal channel, and that will also impact on measurement. And I want to commend the central bank that Nigeria has done a lot in terms of measurement. I will be the first to acknowledge where we have made substantial progress, and I want them to continue in that something. The next step is what he has promised. Dr. Okonkwo asked, why are we not seeing the impact? Sure, we're not seeing the impact because we have not properly leveraged those remittances towards the primary purpose to which they've been sent to. So I wish Dr. Mahmoud has done very well, and I just want to assure you that through Dr. Edobo and others, we continue to contribute to what you're doing. Well done. Continue. You have huge challenges ahead. It's easier for us to criticize, but as we have seen here today, we also have to criticize ourselves for not even being able to technically put this together to meet the time. There lies the huge challenge at home. Thank you very much and have a good evening. God bless.
So thank you very much, Dr. Mayegun. I think if I just may add one word, which I like, Dr. Hassan said that they are encouraging digital banks without offices. And so I'm just wondering if we, the diaspora, will come with initiatives for digital banks, will it be encouraged by the CBN? So I don't want to take too much time because so much time has been. That's just final something I wanted to add. And thank you so much. Dr. Konkwa is going to give a brief vote of thanks. But before that, let me say we appreciate all you have done. And we know how difficult, or at least I know how difficult it is to do monetary policy, believe me. And I know it is easier to criticize and ask questions than to be at the table and get those things to work. So we understand that and appreciate the work you are doing. So don't get us wrong when we ask questions that may not be, that may sound unfriendly. They are not meant to be unfriendly. So do you still want to answer some of those things before the final vote of thanks, or you just want to?
Yeah, I think they were just wrap up comments. The ambassador actually answered Dr. Okonko's better than I can even answer it. And I think that is done. But I also want to add that part of the restructuring of the remittances inflows attraction that we're doing is also to have this local content in IMTOs, because you know all our IMTOs now are foreign based. So we're thinking of also getting local IMTOs, which will also be done by the diaspora, because they're the ones that have the skills and technology and the expertise to do that, given their foreign experiences. So we also have that. And we also want banks that banks to create remittances desk in countries where we have high Nigerian population or diasporans, so that they can facilitate that, and issues of cross rates and charges will also be reduced significantly. And like the ambassador said, we're also looking at bringing down the remittance cost to less than 2%, which is the best global practices. Yes, finally, Dr. Edebo, you asked about whether diasporans, actually the digital bank, we have one semi-digital now, and the full digital bank coming in was done by diasporans. They're the ones that structured all that and bring it in, and then the central bank is very amenable to accepting that. So the current ones are actually diasporans that are major shareholders in them. I think that's all. And also want to thank everyone. I'm really excited to be here. I'm also thrilled by the brilliance of the people that came into it and the questions that came into it. You should also, as you are commending me, also commend Charles, your friend there. He did a lot of pushing for me to come on board here. He also contributed to the PowerPoints I presented. So he also need that. I think he was part of few people, and then he pushed on this a lot. So thank you very much. I'm really happy to be here, and I'm not tired. And Dr. Ambassador, I've already gotten your email, and all of you here, Dr. Edebo, I would like you to also link me up with some of these so that we can be engaging in some of these things. We are creating a platform we call Central Bank Listen. It's just like the Fed listens, for some of you that know. And at that platform, virtual platform, we will be making avenues for diasporans and people around the world to engage and know what Central Bank is doing. And like all this diaspora fund and initiative I'm talking, we'll present it at those forums and get your feeding. A lot of the things you have said, I've written them down. I'm also going to be taking them up with the relevant departments. Thank you very much.
Well, thank you very much. So I think Dr. Hassan has already said something that I was going to say at the end after the vote of thanks that Dr. Kamilis is going to do. Dr. Shimeke, you have done so well. I know your efforts. I know all you did. to get this event, how much you did to facilitate this very event. So you are a member of the roundtable. We appreciate the work you have done and all the sacrifices you have made to make this happen. So thank you very, very much. So I'm going to hand over now to Dr. Okonkwo to just make a very brief final vote of thanks, please.
Thank you, Dr. Dobo. I don't know if thanking Dr. Hassan would be a brief one, but it is actually an honor and a privilege on behalf of the Nigerian Global Roundtable to deliver a vote of thanks after this incredible, unbelievable presentation of Honorable Head of the CBN MPU, Dr. Mahmoud Hassan. Honorable Head of the CBN, we thank you in a very special way for taking actually time out of your very busy schedule to attend this maiden interactive webinar of the Nigerian Global Roundtable on understanding the current monetary policy of Nigeria. Monetary policy in global economic crisis is an impossible task. Considering the profound impact of the COVID-19 pandemic and attendant lockdowns, the dramatic crash of global oil price, which is the main source of the Nigerian foreign exchange, you have mentioned that actually countries like Saudi Arabia suffered 30% no dive, and Nigeria suffered only 6%. That means you have actually done a policy miracle. Thank you. Monetary policy, dear Dr. Hassan, it pleases you therefore to know that the Nigerian Global Roundtable greatly appreciate the policy instruments of your department, like the open market operations, like the loan to deposit ratio, like the targeted credit facility TCF, like the agribusiness small and medium enterprises investment scheme, and the creative industry financing initiative for the youth, which you have emphasized tonight. With these highly creative policies, we have no doubt that your monetary policy unit will continue to excel in executing its primary mandate, which revolves around the management of favorable exchange rate, favorable balance of payments, positive terms of trade, and overall economic stability of the country. We have discussed a lot of policy issues, and we have no doubt that you, Dr. Hassan, have gained unique insight into the passion, into the patriotism, into the potential, into the wealth of knowledge and the interest of the Nigerian diaspora in collaborating with the CBN towards the achievement of the CBN monetary policy mandate. To this end, the Nigerian Global Roundtable is of the opinion that the MPU or the MPD needs to explore disruptive, I repeat, disruptive policies, because it looks like a lot of the policies Nigeria has defied a lot of the policies that are being implemented. So like establishing a Nigerian-owned fintech SPV domiciled right here in Europe. It looks like an impossible task, but we have teams here in Europe who have actually developed a fintech instrument that can facilitate a Nigerian-owned diaspora-specific remittance channel, which the CBN can leverage on. I would like to make reference to one of our young fintech experts integrated, actually, who is here, but I don't want to mention names at this stage of the meeting, who has developed fintech instruments for crowdfunding, payments, and remittances, which can be handed over to Nigerian foreign financial institutions, including the CBN, to use. We understand, we have heard that the CBN is currently working on diaspora monetary policies. We would like to emphasize that we need to be included at this stage, at the formation stage, so that we can see if there are things we can chip in to make it realistic as possible, The CBN, the monetary policy unit may, the monetary policy unit may, as a matter of policy, also emphasize, you have mentioned it, that is also an instrument you people are working on at CBN, a messaging system, a diaspora monetary messaging system with the aim to enlighten the diaspora a little bit more on what the CBN is doing, on the opportunities back home, so that we can take those opportunities, so that we can drive a diaspora propelled FDI and remittances. Foreign direct investment is not only when it comes from a white person. The African diaspora, the Nigerian diaspora can also do FDI. Let me at this juncture appreciate, it has already been appreciated, our fellow diaspora and now a major professional catalyst at CBN, Dr. Charles Chiemeka, who actually agreed to sacrifice his flamboyant comfort in Europe to go home and serve the motherland. Ladies and gentlemen, please join me in giving Dr. Mahmoud Hassan and the entire CBN a resounding round of applause for the veritable effort he is making in developing and implementing highly creative monetary policies to shore up the economic fortunes of Nigeria. Can we please give him a round of applause?
Well, that is,
thank you.
Dr. Konko, that is not possible because the microphones are all muted.
Okay.
We can mute ourselves.
Okay, can we unmute ourselves and clap for him now?
So unmute yourself and clap for 1 second.
Thank you very much. Thank you.
Okay. So thank you very much.
Thank you very much.
Thank you very much.
Thank you. Thank you.
Thank you very much. So we will get back to you. Thank you so much and goodbye.
Thank you very much, and please let's keep in touch.
Okay.
Thank you.
Okay. Goodbye, Dr. Hassan. And
Bye.
goodbye.
Thank you, sir.
Bye bye, Bashir.
Thank you, sister.
Thank you, sir.
Thank you. Welcome, my director.
Thank you to every participant. Goodbye.
Thank you.
Thank you. Bye-bye.
Bye.
Thank you.
Bashir, good night.
Yeah, thank you.
Let's keep in touch, so please.
Presido.
Okay.
That should be continued. Yes, we can. Thank you.
Okay.
Bye. Bye.
So bye then. Good night to everybody.
Pastor
Bye.
Basil, good night.
So, bye.
Thank you very much, Dr. Adobo, and well done, well done. I think.
Yeah, thank you, Dr. Dobo. You have
thank you for your persistence.
actually made our day. Thank you.
We'll have been discouraged and left.
Next time we have a webinar, we won't have any technical problems anymore.
Yeah, now it's practice.
We have some backup for next time. So thank you for your patience and for your understanding at the beginning, please. Thank you.
Thank you.
Okay.
Thank you very much, sir.
Extremely professional, his patience.
Thank you.
Okay, bye-bye. Good night. Bye.
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 Bye.